Listen if you want. All right, we are live on YouTube. We are live in Discord. We are full tilt boogie. Gonna get this day going. Good morning, Steve Diego. Great to see you. Um, Guys, I want you to do something for me. You know, I'm gonna wait till more people come in, but I want you to do something for me. I want you to pretend today. We're gonna play make believe. That you and I are the only people in the room. That you have 3 hours, 3 hours to ask me any question you want, like we were in a private session. Because, guys, that's exactly what this room is. If you're curious, all you have to do is ask. If you have a concern, all you have to do is voice it, guys. So I want you to really loosen the reins a little bit. Ask me the questions. Jonathan, you want to talk about NASDAQ entries? We'll do it. Jay, maybe we do a lesson on strong tops and bottoms. Um, where areas are defined. Guys, don't hold back. Um, Especially if the market's not doing what you want it to do. Don't hold back. Make sure that you're really vocal. We're going to check news real quick. I've already looked at yesterday's trades. I've reviewed them. I have focused on a couple things that I need to fix, focus on a couple things I need to repeat. And now I'm just going to make sure that there's no news that might make things crazy, guys. And one of the things that's going on is the BRICS summit. I have no idea what the BRICS summit is. It's a global economic issues. It's medium impact, which means these guys may jump in front of the media every now and then and say something. So if there's big spikes, that might be it. 10 a.m. we've got the Richmond Manufacturing Index. We do have member Harper speaking. Putin's hosting it. Right on. So guys, there's medium impact news at 10 a.m. It can move the market. Set a note. Make sure you know about it. Make sure you're aware of it. Only you can make the decision whether or not you're willing to trade into it. Everything that I talk about, ladies and gentlemen, comes straight from the Nexgen page, specifically the trading guide. This is where you're going to get the answers. Any rule that I talk about, you'll find it here. Any trade that I talk about, you'll find it here, guys. And there's a whole glossary of common terms, which I'm a big fan of. Frequently asked questions, common terms. And there's one common term that I want to talk about in particular, guys, and this is a high probability trade. High probability. Sounds cool, right? High probability. That's confidence inspiring. Guys, high probability trade means that each indicator on every chart lines up for the rules for the trade. This is the best of the best, guys. This high probability trade is a trade that typically wins 70 to 80% of the time. This is high probability trade. It is a trade that creates a lot of confidence through the memory of success. And guys, this high probability trade is the trade that teaches you to read indicators. This is my first hour every hour. So Sid, you're probably going, man, this guy does the same thing every time I walk into this room. You guys that have been with me for a while are finally saying, hey, thank goodness this guy does the same thing every time I walk in the room, because it's the repetition that creates recognition, guys. It's doing the same thing over and over, building those good habits until it sticks. We talk about this high probability trend trade because in the grand scheme of things, this is probably one of the easiest trades you're going to have to learn. Guys, it only has 3 rules. That's it. We're not overthinking things. If you've ever met me in person, you know I'm not that smart, guys. But what I can do is read indicators. And what I can do... Oh no, you guys can't hear me? Hold on. How about now? Guys, give me a Y if you can hear me. Sound still good, Izzy? Dawn's got me, Red Eye's got me. All right, these guys know the routine. If you can't hear me, reboot, because it can't be on my end if you guys can still hear me, right? Doesn't make sense. Jay, you're not gonna reboot? Give me. So we got some people saying they can. We got some people saying they can't. All right, guys, I'm going to kill Discord real quick, but honestly, I shouldn't, because the reality is, if half of you can hear me, well, then it's probably not me. So let me end it. All right, Discord goes away. I'm going to bring it back up. You guys can probably still hear me. I don't know how it does that. It's some elfin magic. But up comes Discord again, waiting for it on my end. There it is. I'm going to open this up. I'm going to go to where I need to be. Jump back into the education room. Can you guys hear me now? We're good now. Izzy's got me. Paul's got me. Guys, give me a Y if you can hear me. Trying to make sure here. I don't want to leave anybody behind. Don's got me. I like that. Steve Diego? We solid? Rob says no dice. No worries. Hold on, guys. All right, guys, everybody's getting kicked out. So for you YouTubers, I apologize. For whatever reason, Discord gives us some challenges with sound every now and then. I'm not sure why. I'm not sure how to fix it. But we can usually resolve it. So I refuse to get worked up about it. Doesn't do any good, right? Never has, probably never will. Here we go. We're going to start the stage up again. We're going to call it I'm Back. And then we're going to pop this bad boy out. And we're going to start the stage. And I'm going to share my screen just so you guys are in the loop on what we're doing. And everybody good? You got me? And Sid, I believe, man, repetition is the mother of learning, and you're very welcome for me doing the same thing every day. I'm telling you guys, it helps me tremendously. It helps you tremendously to hear the same thing over and over. Guys, it helps me tremendously to do the same thing over and over. Good morning, Miss Adriana. Nice to see you back in here. There's a couple things that I think are vital to getting to where you want to be. But just like your parents probably told you guys, there's no substitute for hard work. There's no substitute for putting your nose to the grindstone, getting a little work done. Elbow grease, whatever you want to call it. So we're going to simplify the elbow grease thing, guys. We're going to focus on this highest probability trend trade. Going to give it a whole hour. Maybe an hour and a half. Who knows? I don't know. Because it's only 3 rules, guys. And these 3 rules, each one gives you an advantage. And I want you, I beg you, I'm pleading with you. When you look at your charts, I want you to say these words out loud. This is what I want you to look for. I want you to be so vocal in your home office there that the dog gets scared, guys. Because a trade is nothing more than momentum, a clear path, and then finally an entry area when these 2 advantages are present. Your advantage of momentum comes from the large chart, guys. It comes from strong trigger lines. Rule number 1, you will have a clear path, room to your profit targets through rule number 2. And rule number 3 is just designed to get you into the market, guys, to give you the best of the best entry. And this entry area is specific to the highest probability trend trade. These 3 rules happen on only 2 charts. Good morning, Miss Cindy. So wonderful to see you today. 2 charts, guys. And I had someone tell me once, Mark, this is ridiculous. There is no way I can be successful with only 3 rules and 2 charts. It's just not enough. Ha, I say. Guys, simplicity is key. There's going to be two charts, guys. Large chart, big chart. It's a slow chart. It's very much a broad stroke of a brush. This is the chart that's going to define the direction of the market. This is the chart that's going to give you the advantage of not only momentum, but absolutely nothing in the way. It defines direction, momentum, and areas, guys, and it does it on the first bar, the most current bar. Only one bar on this big, slow-moving chart. It's hard to see change on this chart, so it gives us that overall view. The small chart is an entry chart, and we only go to the small chart when the rules are met on the large chart. When rules 1 and 2 are in play, guys, momentum and a clear path, you're going to pinpoint using a smaller, faster refinement chart exactly where the market is most likely to continue. This becomes your entry for the highest probability trend trade, guys. You're going to be able to reduce risk. You're going to be able to increase profit potential. And again, rule number 3 is specific to the high probability trend trade as we teach it in this first hour. We use 2 charts because the big chart is the big crowd, the large crowd, the people with money that can make things happen, guys. The large crowd will define the direction of the market. If they want it to go up, it's going up. And if they want it to go down, it's going down. I can't for the life of me find a good reason to fight the large crowd. The large crowd's going to establish momentum when they get excited about a direction, and the large crowd is going to react to key areas. The large crowd leads the way. Let's just go with the flow. The small crowd is this group of yahoos, brass knuckles and leather jackets, and they love to fight the large crowd. And they create these little ripples, these little pushes against everything the large crowd wants to have happen. Guys, they fail 70 to 80% of the time. Whether it's intentional or on accident, they fail 70 to 80% of the time. This is why we use that small crowd. You're going to pinpoint their failure. You're going to pinpoint exactly where the market is most likely to continue with the trend, guys. And I focus on this trade over and over and over because this is the trade that teaches you to read your charts, guys. When I say I want to hear you out loud talking about advantages, this is exactly what I'm talking about. Because chart reading is 90% of your day. Chart reading is not trading. Chart reading is looking to see if those advantages are present, guys. And 90% of your day is actually chart reading. 10% of your day will be taking trades based on the reading of your charts. If you sit in your chair for 6 hours today looking at the market, you're likely to be active about 36 minutes. Guys, the other 5 hours and 24 minutes are spent playing solitaire, looking at charts, watching a video off to the side, but not trading because your advantages aren't present. Once you get good at this chart reading, guys, you're going to understand these key concepts, where the market is likely to continue. That becomes your entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is a great place to take profits, and you're going to understand where the market is likely to stop through those termination conditions, guys. And that's going to tell you, hey, no more trades into this area. This is an area that might stop the market, that might reverse its forward progress. So the process to get to where you want to be really hasn't changed much in the last 20 years. The first thing, probably the most important thing, is let's learn the trigger line and the Fibonacci rules for when it's okay to trade. Let's break down those 3 rules individually, be able to recognize them, quickly, guys. And we're going to piece them together, and we're going to call it a high probability trend trade. I want you to simulate. I want you to practice, guys. One of the challenges that new users, especially you guys that are still on demo, you're like, well, I don't really want to simulate until I feel like I have it down. Guys, I'm almost 5 years into the software, and I learn new stuff every day. Don't wait until you think you have it. It's kind of like saying, well, you know what? I'll get married and have kids when I'm finally comfortable in life. Guys, nobody's ever comfortable in life. Make some babies. But the deal is as you simulate, I want you to post in the room. I want you to tell me what you see. I want you to make sure that you're reading your charts right. And Rob, you're absolutely right. Rob just said kiss of death, not simulating. All you guys are like, I have to make money today. I don't know squat, but I feel like because I'm looking at these indicators, I should be able to make money. Guys, practice it, simulate it. And the one thing that I ask of you every day is when you post in the room, tell me what you see, guys. Tell me why you entered where you entered. Tell me where, why. Describe those advantages, momentum, path, entry. Because the whole goal of this classroom is to make sure that you're reading your charts right. So if you post a chart and you say, hey, look, Mark, I have the best momentum ever, but it's actually weakness, well, we're going to have that lesson together. Same thing with termination conditions. And a lot of times, guys, I can help you with your entries. We can get you lower risk entries, higher profitable exits. All you have to do is post in the room and tell me what you see. That's the first part of getting to where you want to be. The second part, and this goes back to exactly what Sid said, repetition is the mother of learning, guys. There's a spreadsheet. We're going to simplify, but you have to know what these look like. You have to know the trigger looks, the Fibonacci looks, so that they're easy. That's the repetition, guys. The more times you see something, but even more importantly, the more times you type out on a chart, this is what I see, this is what it means, this is the rule that it pertains to, guys. This is how you get to where you want to be, and this happens with the spreadsheet. I didn't open that yet, so let me get this bad boy up. I give you the spreadsheet every day. Nexgen gave it to you when you downloaded the software, actually. It is in your Nexgen Study Picks folder, but I do a lot of updating on it, so feel free to steal mine. Guys, the first page is a trade journal. That's all it is. This is where every time you take a trade, win, lose, or draw, you drop it in here. You talk about your advantages, whether you won or lost, because, you know, let's track that. But the most important thing that I want you to fill out is the feedback from class, right? I am on the driving range, and I'm trying to learn to hit a draw, and my coach is standing behind me. I try to swing the club. He tells me what I'm doing wrong. He tells me what I'm doing right. He tells me what to repeat, what to avoid to get me to where I want to be. That's exactly how this classroom works, guys, the feedback to let you know what you did right or wrong. So make sure you're filling out the feedback section. The 101 section, this is where we've broken down the rules of the high probability trend trade. Strong triggers, clear path, entry. The green section is where you should be taking pictures of these advantages, annotating your charts, talking about what you see, and then what happens is you start to recognize it at the drop of a hat, and you're like, oh my gosh, there's those strong triggers I needed, and there's nothing in the way. Holy smokes, let's find an entry. This is what it looks like. And I think it's important that you understand what it looks like to not have your rules met, guys. If strong triggers is the advantage, weak triggers is the disadvantage. I don't want to take a trade with weak triggers. And if a clear path is the advantage, those termination conditions are the disadvantage. I don't want to take trades into those termination conditions. I want to be on the right side of everything. Good morning, Wayne. Hey, did John Novak get you your answer on that market flow thing? Mostly? Cool. If you need him to follow up, follow up. He'll give it to you, but he's really smart, so he leaves a lot of things assumptive. Guys, we're going to learn these trigger looks. So you're going to learn what it looks like. You're going to create a trading plan based on your reading of the indicators, on the patterns that you want to trade. You're going to start posting pictures of how you're going to manage them. You're going to begin to see patterns as you learn these very basic advantages. And there's a whole section dedicated to termination conditions. And my hope for you guys is that you turn this big empty field and make it look like the one that I've given you here. Almost 400 pictures of Nexgen users using the software. High probability trend trades, longs and shorts, the entry sequence. A very mechanical management plan for beginners. And then a lot of pictures on how to manage a little more effectively, get a little more out of it. Patterns that repeat themselves. All we do is trade patterns. That's what people don't get. We don't trade news releases. We're not trading anything other than a pattern that is testable, that is repeatable, and that has been proven to win more than it loses. And that's how we come up with the idea that the high probability trend trade is your best chance of success. It's a trade that typically wins 70 to 80% of the time. You're going to begin to recognize patterns that help you manage a little bit more. And this is all we're going to do today. We're going to learn it. You're going to post it. It's going to be easy because we're going to keep it simple, guys. We're going to keep it focused. We're not going to ask. Well, you can ask all you want. But if it says strong triggers, I want you to let it be strong triggers. If it says termination conditions, I want you to let it be termination conditions. Your brain is going to insist that I'm not giving you enough. Your brain is going to say, there's got to be too many variables. And guys, you're going to learn all the variables. But if you keep it really focused in the beginning, you're going to get where you want to be a whole lot faster. Rule number 1, strong trigger lines, large chart, big crowd, slow moving chart, first bar. What do strong trigger lines look like? Well, when the background's green and the market's going up, strong trigger lines means that your small triggers, the solid lines, are above and away from the large triggers, the dash lines, guys. It's the space between small and large that lets me know that the odds are favorable for the market to continue up. In a downtrend, when my background is red and I'm looking for rules to be met for short trades, my small triggers are below the large triggers. The large triggers are wide. The space between lets me know that the odds are favorable for the market to continue down. Odds favorable momentum. I get chills every time I say it. Odds favorable momentum, guys. This is the look that pushes a market. This is the look that breaks key Fibonacci areas. And this is the look that covers a lot of mistakes that new users tend to make because momentum is hard to stop on that big chart. When we have the momentum up and down, guys, you're going to use that refinement chart to pinpoint exactly where the small crowd is likely to fail, exactly where the trend is likely to continue. And on a large chart, it looks like these tails. These tails are little pushbacks. You're going to be able to pinpoint exactly where that tail is most likely to form, whether it's long or short. And you're actually going to go back and use these tails to test the methodology, to make sure that you understand the patterns. And we will do that together, guys. But this is the easiest lesson that you're going to get all day because momentum is always momentum. And there's a big run, huh? Let's see if we can find a couple each direction. Just for pictures. There's a lot of little snippets. I want to see a good one both directions. Here we go. How about this, guys? Smalls below the large, larger wide, space between, odds favorable, momentum to the downside. And guess what? Most of you, if you were watching the market, probably found a high probability trend trade right here. And most of you probably found one on this tail as well, all the way down to the key area. Strong triggers, everything's pushing up. Once again, there's one of those tails, potential entries. Guys, the momentum pushes the market. Momentum creates a market likely to go in the direction of the trend. So right now, my small triggers are below my large triggers. Do I have odds favorable momentum on the most current bar? Smalls are now on top of the triggers, not separated, broken away. What do you guys think? Because we're using that first bar, guys. Anybody? Nobody? Guess what? That's not strong triggers. This is your look every time. Separation means strength. Without that separation, guys, we're in a holding pattern. We don't have the momentum we need to look for a trade. So if separation is strength, guys, when they come back together, that's weakness. Whenever you see the small triggers work their way inside of the large triggers, this is a weakening of the large triggers, guys. And that weakening of the large triggers lets me know anything can happen up or down. And I haven't shown this picture in a while. We're going to show it. This is your life cycle. Odds favorable momentum is the best for short trades. This is always your look for the best of the best. But as you grow with the software, as you become comfortable with your chart reads, when one line of the small triggers works inside, it's slowing. You can see the momentum is going away, and there still may be opportunities. And then when the smalls work inside, guys, anything can happen up or down. When you progress, when you grow, when you mature with the software, you still may find opportunities. But this is not the best look for a new user. This is not the best look for a new user. Guys, this is the best of the best, hardest to stop momentum. When you have those anything can happen triggers and you reach a key Fibonacci area, guys, this is where areas bounce. This is where retracements happen. This is where these areas are most likely to create a reversal. And that's rule number one, momentum. Is everybody good with it? Give me a Y in the room if you are. Make me feel like I'm not alone here. Smalls above, smalls below. Separation is strength, ladies and gentlemen. Once that separation is gone, so is your advantage. And we're talking to ourselves in terms of advantages. Rule number two says, hey, don't trade into areas that might stop the market. Don't trade into termination conditions, guys. And termination conditions are Fibonacci-based indicators that may stop the market, that may create an untradeable bounce that might reverse it completely. Termination conditions are where the large crowd are making decisions, guys, and they're horizontal lines on a large chart. And these horizontal lines can create problems for us. These are where the large crowd are making decisions. These are where the big crowd buyers buy, where the sellers sell, where profits are taken, where trades are entered, and where fights happen, guys. And the closer you are to these fibs, the more likely there is to be indecision and spikes. The areas that we're going to use are those Fibonacci areas. The reasons most of you are here, guys. Fibonacci resistance, Fibonacci support. And support and resistance are areas where the market is trending up to resistance, it may stop, bounce, or reverse completely. And when the market is trending down, support is where it may stop, bounce, or reverse completely, guys. Hey, good morning, Cav. Areas of resistance can be a divergence high line, a red Fibonacci resistance line, or yellow 1-to-1s. Areas of support can be blue Fibonacci support, cyan divergence lines, or yellow 1-to-1s if the market trades into them. And guys, the recipe for determining termination conditions, that's redundant, right, is pretty simple. I want you to, so I say a lot of key phrases, guys. I want these to anchor in your brain. Decisions are made at lines. Decisions are made at lines. So in order to determine if one of these lines is problematic, we're going to let price reach it. We're going to let decisions start. So the buyers push up all the way to that red line, and instantly your brain says, uh-oh, decisions. And once you hit resistance, I want you to ask yourself, where are my triggers? Where are those T3 trigger lines? Those same trigger lines that establish momentum. If they remain below an area of resistance, guys, this area may stop the market. This area may create an untradeable bounce. This area might completely reverse the market. If it does completely reverse the market, large triggers go from green to red, we're going to call this a strong top. A termination condition that reverses the market is a strong top. And the decisions were so impactful that the market did a 180. And any trade you take after this one, guys, has a higher chance of winning. And then as that market pushes down, the momentum is great. It slows, it weakens, and it hits Fibonacci support. And decisions are being made. And you guys all say to yourself, man, where are my triggers when I reach this area of support? And you have to say, they're still above. Which means no more trades into this blue line. No more trades into that cyan divergence low. No more trades into 1-to-1s. This is an area that may stop the market, create a bounce, or just make a fight. It might reverse it. If it does, it's a strong bottom. Rule number 2 simply says no trades into an area that may stop the market. No trades into divergence highs if the triggers don't break. No trades into Fibonacci support. Fibonacci resistance. And ladies and gentlemen, what you're seeing is rule number 2 keeping you out of a whole lot of heartache. And that happens a lot. So for the brand new user, for my demo people, for my 30 days in, for you guys looking to have an advantage every time you take a trade, if price reaches an area and the triggers remain below resistance or above support, sit on your hands and do nothing. It costs nothing to do nothing. Areas break all the time, but I'm going to tell you, each time you reach a line, at least for a moment, it's going to be a termination condition. You're going to have to pause and hit the brakes as a new user. When I told you that you would have a great idea of where the market was likely to go, guys, when you reach a line, if you're in a trade, what an outstanding place to take profits because you don't know what's going to happen next. But momentum, remember I said momentum can break areas, guys? This Fibonacci support is considered broken when both my small triggers and my large triggers get below it. When both small and large get below, support becomes resistance. The area is broken. The path is clear until I reach the next area. Price reaches, guys. That's the only time we use price bars. Once price reaches an area, it's up to the triggers to let you know if it's a termination condition or if it's now a clear path until the next area is reached. So when it pushes back up, we reach Fibonacci resistance. All of my triggers are below, and I've got to sit on my hands. And I've got to say, you know, nobody sent me a fax this morning. I don't know if this area is going to hold, break, or if there's going to be a big ugly fight for the next day there. So I choose to do nothing, and that means that I have to do nothing for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars worth of information, guys. I have to do nothing for 13 bars if I'm waiting for a clear path. But once I get that clear path, my path is good until I reach the next area, guys. So if you're a brand new user, I really want you to keep it simple. I want you to keep it focused, and I just want you to say to yourself, lines on a large chart can stop the market. And guys, they do. And rule number 2 is going to help you identify consolidation. Rule number 2, even with odds favorable momentum, is going to keep you from taking that last short. It's going to keep you from getting into that untradeable bounce. Guys, it's going to keep you from hoping the market goes up when your indicators say it's less likely to go up. And what you're going to find is that rule number 2 is going to demand a level of patience, especially if you're either looking for a clear path or a termination. But once you're good at those two, this is going to be your second trade. Remember when I said momentum can break areas? Your trigger lines will show you the potential to break, guys. And when the smalls break through the area, nay, when the smalls smash through an area, 2 to 3 points, guys, and they get below that area, but the large triggers are lagging behind. 50% of my triggers have made it through, 50% have not. We call this the 50-50 trade. Pretty clever, right? You could call it a straddle trade, or you could call it a one up, one down trade. But guys, this look, as long as I have odds favorable momentum, lets me know that this area has the potential to break. This will be your second trade. This will be the trade that you probably take more than the high probability trend trade. But this trade, because it's only potential, means that rule number 2 is not met. And guys, if rule number 2 is not met, it can't be a high probability trend trade. This is what we call a medium probability trend trade. And that means most of your indicators line up for a trade. Momentum is there. You might even have an entry area, but we're void of a clear path, which means that we may have to manage aggressively. We might have to get to a 0 loss. Probably not a home run trade. That's going to be your second option, but I'm going to give you a rock solid plan for it. There will be times when your path isn't clear because areas are stacked. This is 90% of your day, guys. 90% of your day. I can't wait to go short. Dang it. Well, hold on. I can go shoot. Well, I'll go short. Son of a gun. That's like 3 opportunities to swear, guys, inside of 15 minutes. Actually, that was only about 3 minutes. But it's going to be the longest 3 minutes of your life because you're going to feel like you're being left out. You're going to feel like the market's going without you, like you're never going to make money, like this is the last chance to take a trade. Guys, the futures markets trade billions of dollars every day. You need 400 of those billions, $400, to be in a 6-figure income at the end of the year, if you can do that every day. So let rule number 2 create some patience. When the path isn't clear, say out loud, my path isn't clear. I don't need to hope. I don't need to wish the market would go down. I don't have to pray it goes up. I simply need to sit on my hands and wait a minute. And rule number 2, Fibonacci gives you the ability to see where the driving forces are most likely to react, to make decisions, and you can make the decision not to trade into them, guys. And when you trade from them rather than into them, life gets a lot easier. So let's go illustrate again. This is, guys, this is crude oil. This is a live market, right? Loss of momentum through divergence. We didn't have those strong triggers. It pulls all the way back to fibs and 1-to-1s, and the triggers don't break. And it bounces. Avoidable loss. And we get all the way up to the divergence high, and the triggers don't break. Avoidable loss. Avoidable loss. Right to support. Holy smokes, guys. Look at the bounces. We had 1, 2, 3, 4, 5, 6 opportunities to not get our asses kicked. Are you willing to sit on your hands and do nothing when there's nothing to do? Guys, that's the difference between successful traders and struggling traders. When the advantages aren't present, you choose not to trade. So I'm going to say that a lot. I get preachy, guys. I am behind the pulpit, full tilt boogie, because I have made every mistake that you guys could ever hope to make. And I've learned how to fix every mistake that I've ever made. I still have new ones coming. And I share with you exactly how to avoid those mistakes. And the easiest way to do it, guys, is insist on momentum and a clear path. Because once you have those two, you have everything that you need to create a solid, profitable plan. And the more advantages you ditch, the less likely you are to win. And guys, I don't know about you. I'm here to make money. I'm here to win more than I lose. I'm here to fill accounts, not drain them. So momentum, clear path, large chart leads the way. Everybody's cool with that, right? You're all like, man, this is so easy, Mark. When does the hard stuff happen? It doesn't. Doesn't have to be hard, guys. So if these two are true, I've got to go find an entry. I've got to go to that small chart, and I've got to pinpoint exactly where the small crowd is likely to fail. Exactly where the trend is likely to continue, guys. But if I get to that small chart to look for my entry and I see 3 divergences in the same price range, I have to pump the brakes. Because 3 divergences, 3 losses of momentum in the same price range may terminate the trend. And it becomes very powerful with weak triggers, that same rule number 1 lesson, and more powerful still when the third pivot is higher than the previous from a low or lower than the previous from a high. Guys, this is what we call a head and shoulders pattern. So 3 divergences ruin your good time. Termination. The only termination condition on a small chart if the high probability trend trade rules are true on the large chart. Weak triggers makes it more powerful. Head and shoulders makes it more powerful still. And what you're going to find on that small chart, let's see if we can find it. Man, there's 3 kind of in the same area. There's 3 right in the same area. Coincides with the bottom right there, guys. There's another 3 that created a push up. There's 2, and then we get a couple more. Guys, scroll back. Check it out. 1, 2, 3. Doesn't always work, but it works more often than it doesn't, which is why it's a termination condition. And I want to show you this one thing. I was hoping that I would have it on this chart because Rob asked the question earlier about a flashing negative number. Guys, this flashing negative number says that divergence is possible. It doesn't guarantee divergence. Yesterday, we watched a small chart go up for about 20 points with the potential for divergence. And here, it has the potential for divergence, a loss of momentum right here. Guys, if this market continues down, you may see negative number after negative number after negative number after negative number. This is nothing more than potential. Do not give a flashing number any power, please. It's just your software running a calculation. Does that help, Rob? I wanted to make sure that I got that in there for everybody. But Rob asked earlier, guys, this is how the great lessons come to be. Every question you guys ask turns into an opportunity to make everybody smarter. So, rule number 1 is met, and I have momentum. I'm feeling good about a market that's likely to continue in the direction of the trend. Rule number 2 says that I have a clear path. There's nothing in the way, no places where these guys are likely to fight, ruining my profit targets. Life is good. The large chart has told me, Mark, go look for an entry. I'm going to go to a small chart, a faster chart, a refinement chart. And I'm going to remember this phrase and commit it to memory. I am going to use a limit order to buy or sell a pullback at an area inside of triggers. I'm going to wait for the market to come to me with a limit order. And I'm going to wait at an area, at a fib, at a mid-band, at a yellow 1-to-1. But here's the deal, guys, is I want that area to be inside of triggers, and I want that word inside to rattle around your brain every time you look for an entry, because what happens is price returns to large triggers, guys. This happens on a large chart, a small chart, a range chart, a week chart, a day chart. It doesn't matter. Price returns to the large triggers. It's a correction point. Price pulls away, pulls back to the large triggers. Happens all day long. Happens on the small and large chart. So we've put the large chart large triggers on the small chart because we're two chart traders. They're called synthetic triggers. Anytime we pull something from a different time frame, we're going to use that term synthetic. Price may return to the large triggers from the large or the small chart. So when the large chart and the small chart large triggers are overlapping on that small chart, one on top of the other, looks like two snakes riding piggyback. Guys, this is what we call favorable large triggers. Favorable large triggers doesn't mean they're green. Favorable large triggers doesn't mean they're up. Favorable large triggers means that your large and small chart correction point are one on top of the other. This is going to give you the least amount of risk as you get into a trade. So on my small chart, price may retrace back to the large triggers. I have to learn this lesson. It's going to pay dividends for management. On my large chart, price may retrace to the large triggers. Those are my synthetics. I've got a yellow 1-to-1 and I've got a fib inside of the large triggers. I've got a mid band inside of the synthetics, guys. All of these areas could produce a bounce to continue with the trend. It could go from a 1-to-1, it could go from the mid band. So what we're training our brains to do right now is to identify areas inside of favorable large triggers and understand that this is where the bounce happens, that this is the brick wall that we're throwing the tennis ball up against. And I don't know if it's going to be the front of the wall or the back of the wall. So we're going to create what we call a window of opportunity. And it's a pretty easy process. You know what? I'm going to go to the process from the spreadsheet because I haven't done that in a couple days. And I like to keep it exciting. All right, here we go. Starting on the large chart, guys. Always starting on the large chart. Where's it coming from? It's coming from one of those strong bottoms, one of those termination conditions that reverses the market. Not mandatory for the trade, but it sure does give me warm fuzzies, lets me know that any trade that happens after is more likely to win. I have odds favorable momentum. The smalls are separated from the large are wide, they're angled in the direction of the trend. The space between the two lets me know that the momentum is strong. And price has not reached Fibonacci resistance on my large chart. The large chart defines areas. It's time to look for an entry. Can you guys give me a Y if you're with me? Rule number 1 says strength. Rule number 2 says price has not reached a fib. But Mark, it's only 9 ticks to that stupid red line. That's not much money. Darn right it's not much money. That's why we use the refinement chart. So everything says up, everything says up. I'm absolutely terrified that the market's going without me. And I have to wait for a reversal bar, guys. I'm going to wait for the small crowd to fight. I'm going to wait for that loss of momentum on the wrong side of the triggers. This red bar, after all of these green bars, says, guess what? The fight is on. Here's the beginning of your pullback. The reversal bar is not my entry. Not my entry. Once I get the reversal bar, my job is to locate those triggers, guys, large and synthetic. Where are they? Because I know that this is the range where price is most likely to return to, from the top of the triggers to the bottom of the triggers, to the synthetics to the large, guys. And inside of these triggers is where I'm going to look for my areas. You guys with me so far? The place where the market is most likely to continue, guys, the point where the small crowd is most likely to fail is a window from the highest point of support, closest to the reversal bar, to the lowest point of support inside of favorable large triggers, furthest from the reversal bar, excuse me. Notice that inside is all caps, guys. I want you to use that word. Inside of favorable large triggers. This is where the market is most likely to continue. Guys, triggers are where price is most likely to return. Areas inside of triggers is where price is most likely to continue. This is your window of opportunity. The woo, Ric Flair came up with this. And guys, your job, once you establish that window, is to right click on your chart and learn how to have the trust to activate a limit order right at that highest point of support, a tick or two above. Wait, hope, wish, and pray that the small crowd gets there, guys. There's nothing else you can do. You'll never be in charge of whether or not they get your entry. You'll never know whether you're going to get filled, whether you're going to win, whether you're going to lose. The only thing you will ever be in control of is whether or not your rules are met, guys. That's the only thing that you will ever be in control of. So, where the heck is my PowerPoint? There it is. Everything says up. The path is clear, the momentum is strong. Wait for the reversal bar. Find your triggers. Define your window. Guys, this is where the market is most likely to continue. Anything on the wrong side of the triggers, anything below the trigger lines for a long trade is outside of the window. Anything below those trigger lines is where the market should not go. If this is going to be one of those 70 to 80% winners, guys, we shouldn't get all the way down here. This is the wrong side of everything, and my advantage is gone. And then the flip side, man, I got a little discombobulated here. If we're going short, I wait for the reversal bar. I find my triggers. I look for the areas inside. Guys, I have one area inside of triggers. What a magical moment. That takes all the guesswork out. Anything on the wrong side of the triggers is where the market should not go. Anything on the wrong side of the triggers, above the triggers in a short trade, is not where I want to be in this trade. This is where my advantage is gone. Ladies and gentlemen, that is the high probability trend trade. And once you can define where the market is most likely to continue, I encourage you guys to give me a couple weeks on this one. Get good at it. Learn these very basic concepts. Pinpoint where the market is most likely to continue. And then by default, you understand where the market shouldn't go. And this is your first stop, guys. You will move your stop to 4 or 5 ticks above those trigger lines, and you're going to say to yourself, those sons of guns have to get me because I have the advantage of momentum and that market is likely to continue down. I have a clear path. There's not a darn thing for that market to bounce off of, and I pinpointed exactly where the market is most likely to continue, and I know through a little bit of study, simulation, and class feedback where my stop should go. And if they come get you guys, if that small crowd pushes up, you're going to take a loser. I got a text from someone yesterday, and the exact phrase, I didn't want to take a loser. Didn't want to take a loser. And he didn't take a loser. He got out break even, and the market did everything the indicator said it was going to do. Guys, you have to be willing to lose. Losing is a cost of doing business. Losing is a normal part of a positive equity curve. And I'm going to encourage you, be okay taking losses, but make sure you're taking the right losses. Make sure you're taking the losses that had momentum, clear path, and entry area, because you know if you take this trade 10 times in a row, you're likely to lose 2 or 3, guys. But you can manage your losses through good stop placement, whether it's 4 to 5 ticks above for a short or 4 to 5 ticks below for a long. And then your second, or your first stop movement, I suppose, if you get a confirmation bar, a reversal bar in the direction of your trade, guys, 2 ticks above it, 2 ticks below it. And it's not uncommon to watch Nexgen users get into the perfect long trade or short trade, get a reversal bar, reduce their risk, and then the small crowd, I don't know, drinks a Red Bull or something and pushes against the trade. And the loss is minimal rather than way out here hoping. And guys, this is what we talk about every day. High probability trend trade. Best of the best. And before we get into this look, we're going to go back and see if we can find one of those tails. And it looks like it's going to give us a pretty quick example right now. So as the S&P comes up, and that momentum is starting to go, and I'm not even looking at my small chart yet, I'm going to circle a tail. And does everybody see how it pulled right back to support inside of those triggers that are overlapping? And how it pulled right back to support inside of those triggers that are overlapping? And how it pulled right back to support inside of those triggers that are overlapping? Guys, that's your pattern. That is exactly what you're looking for. Let's see if we can find, this was kind of in the middle of the night, but let's take a look at it. I'm going to circle a tail. I have momentum and the potential to break. Does everybody see what I'm doing here? I have momentum and the potential to break. So I'm going to go back on my small chart and we're going to find that arrow. We're going to see what it looks like. And it is directly to resistance inside of triggers. Can you give me a Y if you see it? And then this one is kind of into resistance in between the triggers. And guys, this is exactly what I was hoping to see, because very often this is going to be your look, guys. This is the best look. Overlapping, one on top of the other, easy peasy, tiny little window, guys. But this isn't the only look, and to be honest with you, very often you will get this split trigger look when the large and the synthetics are separated. And this is where you really have to embrace the idea that price may return to these triggers, but it can just equally as powerful return to these triggers, and you don't know. And then you have to believe that it may bounce from a mid band on its way down to these, or it may make it all the way here and bounce from a fib inside. And you never know. But the one thing that you can be sure of is that your initial stop goes below these triggers. So correction, bounce. Stop always goes down here, guys, because that's where the market shouldn't go. So when you have this level of indecision, when you have this level of risk, this is where you can use a reversal bar, that same confirmation bar that goes in the direction of your trade. And you can say to yourself, I know that it could go from here, and I know that it could go to here. Let me force the market to go in the direction of my trade, because once it does, your stop is 2 ticks below. And guys, this is a great way. When my entry isn't perfect, it's okay to insist on confirmation. And this is going to happen a lot more than you would expect. So let's pull that same look up here. Everything says down, the market is cranking, the potential to break is there. And as I come back, I've got a correction point all the way up here. And I've got a correction point all the way down here. Are you guys with me? Because your stop, ladies and gentlemen, has to be up here on this trade. And great googly moogly, I am not putting 7 points of risk on a trade. I'm better than that. But if I wait for this confirmation bar, guys, I'm in right here. And my risk is clearly defined behind it, and it becomes a pretty easy winner. Does that make sense, everybody? That's a real world example. 1, 2, 3, 4 divergences in the same price range. Well, that may terminate a trend. Guys, this is what we talk about every day. And then finally, you just got to be able to study it. When the large chart rules are met, circle those tails. Go back historically. You're going to get further with the software in your first couple of weeks by going through this than you will trying to trade. I want you to trade, but do this too. Circle tails. Does it line up with areas inside of favorable large triggers? If it does, guys, that's your trade. That's your study tool. And I'm going to give you a couple more study tools. Whoops, there we go. Chart reading 101. When you start out, guys, you're becoming a chart reader. In order to get to where you want to be, you've got to be able to recognize some looks and patterns quickly. You need to understand momentum. You need to be able to recognize termination conditions or clear path, and you need to find your entries, guys. So the quickest way to do that isn't taking trades, to be honest with you. Start snapping pictures, guys. Go out, take pictures. 25 pictures of strong triggers, 25 pictures of weak triggers, 25 pictures of a clear path, and 25 pictures of a termination, guys. And if you do that, whoops, what did I do? If you do that, you're never going to make the mistake between momentum and weakness, between clear path and termination. And then you just need to get those entries, guys. But don't just take pictures. I'm going to pull up that 101 section again. I want you to talk about the whys. And for those of you that are new with me, I'm going to put you on the spot real quick. Sid, have you started this yet? Have you started taking pictures of strong triggers and saying to yourself, man, this is exactly what it looks like. This is exactly what it means. I should never miss this, because I promise you, if you do this, it's going to get easier for you. And you're going to go through that same process, not just taking pictures, but talking about why is it a clear path. Because both small and large cleared resistance. It's broken. I have a clear path until I reach the next area. Rule number 2 is met. And guys, this is how you're going to get to where you want to be. Day in and day out. Take pictures. Take a lot of pictures. Let me share with you real quick. All of these pictures at the bottom of my Snagit, those are all from today. But I ran out of room down there in my recent pictures. If you look at, today is the 22nd. I've got 28 pictures so far today. 28 pictures so far today as I study. Since the 21st, these are 9 per row. Those are all the 21st. So I've got 1, 2, 3, 4, 5, 6. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Guys, I have over 100 pictures in the last 2 days. I'm learning something new right now. Over 100 pictures, annotated charts in the last 2 days. There's a reason I can read indicators quickly, because I did the work. You've got to do the work. As you take those pictures, I'm going to give you the high probability trend trade checklist. Why do they keep opening over there? This defines that strong top or bottom. This shows you momentum and weakness. This identifies terminations, potential, and broken. And it shows you exactly where to put your limit order, guys. This is your policing as you take pictures, as you take trades. Make sure it's the correct looks. And then use the trend trade checklist. Print this one out. Grab the most delicious flavored crayon that you have and make sure that you can mark yes to all of these, because if you can, nobody's ever done worse than 70%, guys. And I'm telling you, if you insist, my rules are met, I take the trade, my rules are not, I avoid the trade. It takes all the stress of trading out of it. It really does, guys. So print this one out. Use these words when you annotate your chart. Write odds favorable, write momentum, write strong triggers, write terminations, rule not met, write area inside of favorable large triggers. It'll make it easier. And then as you trade, I'm going to give you a plan, guys. This is the KISS plan. This plan is a stepping stone in your learning journey. When I teach the high probability trend trade for the first hour and a half, guys, I'm not teaching it because it's your only trade, because it's all you can ever do. The high probability trend trade is your foundation trade. This is your first trade. This is the trade that typically wins 70 to 80% of the time. This is the trade that creates confidence through that win percentage, and most importantly, this is the trade that teaches you to read your indicators, guys. This plan is designed to optimize your chances of success with the high probability trend trade as a new user. Why do I want to optimize the chances of success? Because I don't want you to leave me. I want you to stay with me. I want you to commit to this process, to learn to do this. It'll change your life when you get good at it. And then through simulation, study, class feedback, continuous practice, you're going to craft a plan tailored to your personal goals that's based on your experience reading the indicators. Guys, once you can read your charts, you're going to see an awful lot of opportunity. And the cool thing is you're going to begin to recognize patterns, entries, management things that you didn't know existed, that you didn't even know you were looking for, because you can identify momentum and termination conditions and entry areas easily because you studied. So your simple plan for consistency, guys, don't fight the large chart. Don't fight the momentum on the large chart. Don't trade into areas on the large chart. Let the large chart lead the way. The large chart is the most awesome lazy river that's ever been invented, and if you just hop in your tube and go with it, it takes a lot of the stress out. Define your entry, because great entries create manageable trades. Get into the market where the market is most likely to continue. Take your short trade from the area of resistance inside of favorable large triggers, because once you can identify this, you know exactly where the market shouldn't go. And guys, that is your first stop. It will get hit from time to time. It's a normal part of a positive equity curve. But if it doesn't get hit, and it gives you that reversal bar in the direction of your trade, guys, this is your first stop movement. Your management plan, according to the KISS plan, is the most mechanical, basic, emotionless plan that I could come up with. It's designed to get you paid, and it's based on your ability to enter where the market is most likely to continue. Here's that phrase again. You will craft a plan tailored to your personal goals based on your ability to read the indicators. Once you're reading your charts, guys, this probably won't be your management plan, but until you're capable, let's focus on great entries, intelligent stop placements that are based on if-then scenarios rather than our emotions, and let's learn to get paid. Guys, once you get the reversal bar, you're 2 ticks above it in this short trade. And you're either going to get stopped for a small loser, whatever, part of doing business, or it's going to hit your first target, guys. And your first target is only $100 away from entry. Your first target is fast. Your first target is designed to get you paid, because getting paid creates confidence, guys. When you hit your first target, those sweaty palms dry up. When you hit your first target, those butterflies leave your stomach, guys. That pleat that you just sucked into your chair starts to relax. Guys, getting paid is the name of the game when you're a day trader. Getting money into your account rather than hoping, wishing, wanting, and praying, guys. This is $100 worth of confidence. And your next stop placement is break even. And guys, this isn't the best stop placement. But as a brand new user, by having a break-even stop, what it does for you is it helps you trust the large chart. It helps you believe that the only reason you took this trade was because of momentum and a clear path, and you'll be damned if you're going to jump out with all those advantages. And guys, it's either going to hit your break-even stop or it's going to hit the second target, and the second target's only $200 away from entry. And then once it hits it, you're out. You're done. No more. The adrenaline wears off. The anxiety goes away. And guys, you just made $300 in a high probability trend trade, and it doesn't matter what happens next. You're out. You'll wait for the next entry. And what's going to happen is you're going to start to learn. When the large chart's perfect, guys, when the path is clear, when the momentum is great, you're going to start putting your targets a little further out, and you're going to say clever things like, with this level of momentum from a perfect entry, I've already been paid. I'm going to turn that $300 trade into a $400, $500, $600, $700 trade. And guys, this is the next step, but you've got to learn to trust this through the routine of getting paid. So that's my first hour, guys. Everything that you learn in the high probability trend trade is going to open doors for you. It's going to open doors for more trades, more opportunities, better management, more money. Your second trade is that 50-50 trade. And guys, this is attached to the high probability trend trade checklist or KISS plan. And this 50-50 plan is designed to optimize your chances of success with the 50-50 trade. The 50-50 trade, the potential to break trade, is the most lost trade among people in my classroom because they don't have the advantages they need in what isn't a high probability trade, guys. You have already sacrificed rule number 2. You're without. 33% of your advantages are gone. So This plan to optimize your chances of success says that it must be from a strong top or bottom. And if you miss that lesson on the high probability trend trade, you're going to have difficulty finding success with the 50-50. It says that you must have odds favorable momentum on both charts. Because we have sacrificed our clear path, it's imperative that we double down on momentum, which is why if divergence prints on the 5-1, there is no trade. Divergence is one of the #1 killers for the high probability or for the medium probability 50-50 trade. Divergence kills these trades. When you guys show me 50-50 losers, almost every time there's divergence. But if there's not, get in. And then it reminds you, divergence, no trading. Guys, the same way the entry rules for the high probability trend trade are different than the entry rules for the 50-50 trade, so is the management. This is not a high probability trade, guys. It'll be different. You have to know what you're getting into so you know how to manage. Because you can't manage a high probability trend trade like a 50-50 and vice versa. And a lot of times when you guys try to add trades before you're ready, I see you not taking high probability trend trades because of one divergence on the small chart. Takes 3, guys. So we're going to focus on the best of the best. You guys are going to learn how to get paid, guys. And once you get comfortable, what you're going to realize is that it doesn't take a lot of money every day to make a lot of money. One high probability trend trade that goes the distance, or 3 break-even trades, guys, put you at 75 grand a year. Once you hit 400, you're in the 100,000, 150 for only $200 more a day, guys. $250,000 at 1,000 a day. And when you get good at reading your indicators, you're likely to find these opportunities. But the one thing that you have to know, without question, without hesitation, is you have to know why you're going to get into a trade and why you're going to get out. And do this on simulator. Because if you try to go live, actually do whatever you want. I don't give trading advice. But going live when you haven't proven on simulator that you have what it takes to be consistent is foolhardy. I'm just saying. Why will I enter? Because my rules are met. I have to know my rules like the back of my hand. Why will I exit? Because my exit conditions were met. I have to know these like the back of my hand. Guys, management is harder than entries because management gives you something to lose, guys. And rules are patterns that have been proven to win more than they lose. That's where the entry comes from. Your process yields the results. Rules help remove the emotion because if you believe, if you trust, if you know in your heart that you take 10 high probability trend trades and 7 are likely to win, you feel comfortable taking the same trade every time. And when it loses, it doesn't sting so much. You're like, cost of doing business. Let me get back in the game. Let me get to that next trade. So that's it. First hour. You guys survived it. Congratulations. I'm going to give you the PDF versions right now. This is everything that I just posted in the room, guys. High probability trend trade checklist, KISS plan, exit conditions, daily goals. And there's even my PowerPoint in there that I used to teach as a PDF version. And for those of you that are all into that Microsoft Word, I'm going to give you the same stuff in Microsoft Word so that you have it. So's that you have it. And guys, this is my first hour. This is my first hour every day. I'm not doing this because I can't think of anything else to say, guys. I'm doing this because the more you learn, the more times you hear it, the more times you see it, the more likely you are to follow it. And for whatever reason, I'm having trouble getting these Word docs to get in there. So let's see. Nope. Okay, I'll give it a second. Let me create space. It's probably Ron's stuff messing it up. I don't know. Are there any questions about the high probability trend trade, guys? Are there any questions about entries, about management? Are there any questions? None? Everybody's perfect. I love that. That makes my job easy. It reminds me that I'm an amazing teacher. Look at this. Price reached, yellow 1-to-1s. Has the potential to stop the market. It's certainly not guaranteed to stop the market, but I don't have a clear path. Here I had momentum in a clear path, and there it pulled back to support inside of triggers. I bet you some of you were going to show me that trade. Crude oil went directly into that fib. It had the potential to break. It gave a pullback, and then it gave that 50-50 killing divergence, and sure enough, down it goes. Pretty awesome, right? So guys, here's what's going to happen. I'm going to go walk a lap. I'm super hydrated. I got to fix that. When I come back, we're going to do two things. We're going to look at all the charts that you guys posted. And of course, you guys have told me about momentum, clear path, and entry. So when I look at your charts, I'm going to talk about momentum, clear path, and entry. And we're just going to look for ways to do it better. Make sure that your chart read is correct. See if there was a lower risk entry or a higher profitability exit. So please tell me what you see and what you're thinking. Andy, you have more trouble with prop firms than NinjaTrader. There is never trouble with Nexgen stuff, and Jason is way more help than those other jerks. Well, Andy, there is great news, my friend, because pretty soon Nexgen is going to be the prop firm. And pretty soon, Nexgen is going to be the platform. We are so close. Oh man, we all are. The programmers are so close. John should have a working copy of the platform, hopefully this week. And I've already seen a load of stuff done on the prop firm. And guys, the only thing that I know we're all excited, but there's one word. And if that word isn't true, perfect, John's not going to do it. Man, yeah, he still doesn't have internet. He's still on hotspots, which is one of the things that's slowing it down. Guys, when I come back, we're going to go through all of this. I'm going to take a short break. I encourage you guys to do the same. Get out of your chairs and go run a lap. And then when I come back, we will talk. Whoa, I crashed. One of the things that NinjaTrader has trouble with is if you draw on it an awful lot. And guys, I draw on NinjaTrader an awful lot. So it turns out that I just crashed it. So while that pulls back up, I'm going to run a lap. When I come back, we're going to start looking at your charts, guys. If you have questions, post them. I'll see you in a minute. just for grins, poops and giggles, if you will. And I'm going to use the call out box right here in the big gray area while we have it. And I'm going to do some shapes, and I want you to see this. Let's make it big. Guys, this is 6 times you didn't have to take an avoidable loss. And I want you to let this kind of sink in a little bit. This is 6 times your rules said don't lose money. Guys, this is the key. The difference between successful traders and traders that struggle. And I will say this every day because I have been a trader that struggled. The difference between the two is the ability to do nothing when there is nothing to do. The patience to sit on your hands when the advantages aren't present. The willingness to not be in a trade because you know that a better trade is coming, guys. I'm telling you right now. If you keep it simple and basic, there's no reason to get caught in times of consolidation. There's no reasons to hope. Simply wait for the best of the best. So, with that being said, I'm going to start clicking on the charts that you guys posted in the room. We're going to see what you've been doing. And we'll get into it. And then Jay, I just wanted to make sure that you got your questions answered. So let's go through and talk about it. Whoops. Let me start on your first one. Might as well start first, right? So you said questions on the 1-to-1 large chart. Or the 1-to-1s on the large chart. Do I need to respect on a small chart? So Jay, this is where I go back to language a lot, and this is a lesson for everybody, and I'm going to say it right now. You may post a chart in the room that sparks a lesson in my brain that you didn't want to hear. Work through that, because as long as I have your picture, there's opportunities. Guys, large chart defines areas. Large chart tells me where decisions might be made. Large chart tells me where trouble is. So Jay, when we look at your large chart and you see these 1-to-1s, you don't even have to see them on the small chart because you know that it's an area on the large chart that may create a bounce. Does that make sense? And because this time frame is different than this time frame, some of the things you guys are going to see is the large chart may have 1-to-1s, but you don't see them on the small chart. The small chart may have divergences that don't show up on the large chart. They're 2 very different time frames, so divergences and 1-to-1s won't show up in the same place. And this is considered a weak bottom because it's not a termination that reversed the market. It's just kind of a pivot with a loss in momentum. So great question there, Jay. And let's see what we have. Strong triggers, odds favorable momentum, in and out on a 4-lot for multiple winners, up 1150. So everything says up with the potential to break. You get in, you get out quick. 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 Nothing wrong with that. Look at the large chart momentum. Is there anything? This is such a great lesson, Jay. You probably didn't know that you were going to be teaching it. Is there anything about these trigger lines that suggests down? Is there anything about these trigger lines that say, hey, it's going to be tough? And I want you to see Jay's exits. Out at trouble spot, potentially, and then back in. Out at trouble, and then back in. Out at trouble, and then back in. Chose to get paid at lines. Jay, you are a new man. Amazing, dude. What a great job. Isn't that easier than just hoping and holding and praying and wishing and wanting and all that nonsense that keeps us from getting stopped out on big retracements? Whole plate full of chili dogs. Amen. But Jay, that was the one thing that you needed, wasn't it? You needed to believe that the next trade was coming. I love it. Everything says up. You get in on the other side of trouble. Make money. Get back in. Make money. Get back in. Make money. I love it. So here's a question though, Jay. Let me look at the time. I can't see the time. This is, okay, that's NASDAQ. This is the S&P. I'm assuming these trades happen before the NASDAQ trades. I just want to make sure because that says 1150. This says 225. I want to make sure you didn't lose $900 somewhere, but rather you just added $900 from the NASDAQ. I notice these things. I want to make sure I'm getting all the information that you guys are doing. But Jay, outstanding, dude. I mean, just outstanding. Post a couple pictures, get a little feedback, take some concepts, and then you made them great. You turned them into something that worked for you. One on Sim, one on Apex. Right on. Very nice. All right, Steve Diego. Steve Diego says, strong top, termination reverses the market. Strong bottom, termination reverses the market. Guys, rule number 2, right? So from the strong bottom, the strongest triggers you could ever hope for. Steve says, let me read your stuff. Price above, large strong triggers, small strong triggers, separated from large. With this momentum and trigger look, price has the potential to break 1-to-1s and get to the fib. It has the potential, right? Absolutely. Price above the large, strong trigger, small trigger separated. Oh, same thing, it's just on there. Odds favorable on both. And Steve says, check it out, Mark. There's my white bar off of all the trouble. I'm getting in because this thing is screaming. And I want you guys to pay attention to this. I love this. Steve, all the props. Steve says, this area can be a huge pain in my ass. Let me make sure I get paid there. But with this momentum, it's likely to come up here. And guys, look at those exits. Correct side of trouble, all the momentum in the world, and that's it. Steve, go play golf. You're done. Go play done. That's from 23 to 46, 42. That's $400 worth of movement. Freaking amazing, Jay. I'm sorry, Steve. Sorry, I was looking at Jay's name. Outstanding. Is it a high probability trend trade? Nope. Is it momentum in a clear path? You better believe it is, guys. I told you, once you see the first two, once you recognize it, man, doors open. I love everything about it. Pete says, strong trending market, smalls riding large, get to the other side of trouble. And it pulls back to the area inside of triggers, and Pete understands his chart reading enough to say, you know what? If this bad boy fails, it's probably going to turn into one of these with this look here. And that's exactly what it did. It was momentum in a clear path. He tried to just jump in, didn't work out, turned into a trend trade, and he gets out of trouble. Beautiful. And then when it breaks, he gets back in and makes more money. Outstanding trading, Pete. And then Cav, always good to see you. Momentum to the downside. Everything says down. Rockstar entry. Beautiful, beautiful. Guys, look at that. That's everything that we just spoke of. Everything. And Cav absolutely nailed it. Great trade, Cav. Odds favorable, clear path. Make that money. And then Pete, everything says up. There's absolutely nothing in the way. I love it. I'm going to JTFI. And then if it comes against me, I made my 20 ticks. Nothing in the way, guys. Nothing to create a bounce. So important. Mr. Diego, strong top again. Hold it. Can everybody see this chart okay? I want you to look at this right. You can't see it, Josh? Before we even look at your chart, Steve, I want to share this with the class. I want you to look at his exit right before the reversal, guys. Look at his exit. You want to talk walking around like a peacock, feeling good? He knew exactly where the market was likely to go and took profits there. And then it reversed. And he said, well, hell, it doesn't have to go up all day. These are futures. And with all this momentum, I can jump in. And it looks like he got out and re-entered on the correct side of triggers and stay short through divergence fibs 1-to-1s with this look. There's a question mark there. What do your rules say, Steve? Do your rules say get out at areas, or do your rules say get paid at areas? Because here they said get out at the first trouble and get paid at the next trouble with all the momentum potential to break. So this is where, Steve, I use the idea that as long as I don't get a reversal bar on this small chart, it's going down. So you never even get a hint of a loss of momentum until this fib here. And then you re-enter. I don't know that that's on the wrong side directly into a termination. Maybe not your best look. But once you get to the downside of everything, that one's a little more effortless to go down. Great trading, Steve. He's probably ignoring me in trading right now. Cindy, this is my husband's trade. Strong triggers, 50-50. Pull back to the area right inside of the triggers. Out at the first trouble. Trailing stop after the fib break. I like it. One up, one down. Awesome look. So Cindy, I want you to tell your husband, with this look, he's probably going to make it to trouble, right? Steve will tell you the potential is there. With this look, with this clear path, he's likely to get at least to that next bump spot. Great trade, though. You tell him I said so. My favorite phrase in trading, base hit. Trouble holds, momentum is strong, path is clear, and Ron says, why not just get in, get out, get paid? Get in, get out, get paid. That's crude oil, right? What a great trade. Great trade. I'm going to steal your picture and I'm going to send it to my friend that's learning this trade. Nice one, Ron. Base hits, guys. Base hits pay bills. Pete. Sometimes reversal bar entries fail even when everything looks beautiful. Wide separate, odds favorable. Take the reversal bar, risk is established. Didn't work out. You were getting a cup of coffee. And then Steve, a lot of us had fibs there, so maybe different time zone. Because you're in a different time zone, you didn't have the fib. One thing that you might have known, Pete. Oh, did I call you the wrong name? I'm sorry. Sorry, sometimes I get deep into it. Oh, I called you Steve. My bad. Could be an alter ego. When I have split triggers and the large triggers are a full bar away, I almost always wait for a reversal bar off the large triggers. Does that make sense? When those large triggers are a full bar away, knowing what I know about price returning to the large triggers, I love to wait for the lower area, unless it's like right here, right off the bottom. Once I get out a little bit, they're likely to correct. This is something that I've been watching. It's not a rule. It's just a pattern that I've kind of been noticing. And my apologies for calling you Steve. And then Sid, having trouble typing in a box. No worries. Are you using capture software, Sid? Or did you get Snagit? I forget. Let's go through it. I've got both. So you're using capture. So what I'm going to do is I'm going to go capture, and I'm just going to take this picture real quick, because clearly you can take a picture. And you're comfortable with the arrows. Click and drag, put them where you want them. You're good with the shapes. Click and drag, put them where you want them. So to type on it, Sid, go to the call out box, and this is actually click and drag too. So you'll create your box, left click, drag down, and then make sure that the cursor's blinking in there, and that's when you can type. Sometimes you'll make the box and click someplace else and you won't see that cursor, and you'll try to type and nothing will come up. Double click in the box, it'll get you. Sometimes this box isn't black, but rather it's white and everything goes away. So make sure that your font isn't the same color as the box, but that double clicking cursor in there. So like right now it's not in there, and if I bang on my keyboard, nothing shows up. You guys can probably hear the banging on my keyboard. But once I have that cursor in there, it's pretty easy. Give it a try, see if you can do it, and that should get you fixed, man. You're welcome. And guys, this is what the classroom is for. It doesn't have to be your trade. I can't stress that enough. I don't have to see your charts to help you. You can ask me anything. You can say, Mark, I need help with capture. Hey, Mark, show me an entry. Mark, show me how to circle a tail and get something. So great question. Great question. And guys, these are the most important questions, I think. Because what you're asking is, hey, Mark, how do I get feedback? How do you and I have a conversation? Well, we do it with this. So when I pull this up and everything's ready to go, Red Eye, there's two options down here. There's the copy button. And if I click the copy button, it instantly goes to my clipboard. And I come over to the room and I can paste it directly in. If you're in the pop-out of the education room, guys, you have to hit Control-V. It won't let you right-click, copy-paste. You have to do the Control-V option. And then Red Eye, the one that I prefer, and I prefer it for a couple reasons, is that you click this upload button. Because when you click the upload button, it gives you that screencast link. And what this does for you, once you copy it, you can drop the screencast link into the room, and then we'll have that conversation with whatever you post. But most importantly, the spreadsheet. Man, this is your study tool. This is your trade journal. So you can come and you can post that picture into the spreadsheet. And while we're doing it, let's go ahead and do a hyperlink lesson, guys. If I right click and post it in the spreadsheet, it says screencast com blah, 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 with a couple letters, right? I don't know what's going on in this trade. All I know is that it's a picture. So what I like to do is go to the insert tab and click on this link button, because this link button is going to create a hyperlink. So I'll drop that address right in the address bar the same way I would do it if I were going to Google or eBay or something like that. And under text to display, I'll put long trade winner, because let's be honest, we're winners, right? And now I've got that in there, and all I have to do is click on it, and now I've got a picture that I can study that comes up perfectly each and every time. And that's one of the big things. So as you go through and you take pictures of momentum, if you go through and take pictures of termination conditions, it's the exact same thing. You drop that link in there. And guys, once you've done it 3 or 4 times, instead of pasting and going through that process, you can right click and it's going to default you to the link button. Microsoft is pretty smart like that. You're welcome. I think that's the best lesson I could ever give in this classroom, because how do you get feedback? If you don't post in the room, I can't give you feedback. All right, Cav. 3 trades. So let's see what we have. The first trade is directly into resistance with every trigger below, and Cav says, because of the strong bottom, I'll take a quick little snippet, but I'm not going to sit and hope. And then when he starts to get above it, Cav, you got cold feet. I'm not sure what happened there, but I know that's probably not your tick range. I mean, that's the perfect momentum trade, and it didn't lose momentum till up here. And then with everything up from a strong bottom directly to support inside of triggers, and that one was pretty darn easy, wasn't it, Cav? Guys, what you're seeing is the way to take trades all the way from a strong bottom. The first one relies on being on the correct side of these small triggers that have rolled, and that's a quick trade just to get to trouble. And then the second one is a momentum trade that Nexgen teaches, and that one could have been held a little longer. And guys, when momentum trades fail and the conditions are right, very often they become the perfect trend trade. Great trading, Cav. All right. Cindy, are these yours or are these Mr. Cindy's? Good top? Absolutely. Strong triggers? You better believe it. Potential to break? 100%. No divergence. Perfect entry. You took profits at the first one. I should adjust second target at the fib. I agree. Cindy, I'm going to use language against you real quick. This entry is perfect. Beautiful. And your entry was at areas inside of triggers. And then your exit, you know what? I don't even think I want to type twice. I'm just going to go ahead and paste it. Was it areas inside of triggers? Guys, this is a pretty common thing. If you're going to take an exit, don't take an exit at an entry spot. Does that make sense, Cindy? Your perfect entry was at the area inside of triggers. And then you got paid. I love it. And this is where you have to make a decision. This is where you have to say, I'm either going to exit my trade, right? Or if I get a pullback, where shouldn't the market go? And it shouldn't go above this pivot that you had right here. So your stop's got to be up here. And if you just decide to exit, get paid, there's your re-entry. It doesn't guarantee a re-entry, but you're absolutely right. This is the look that says that fib is probably going to get hit. It's a great trade. Just a little opportunity there. Beautiful trade. And then this one, everything says down. You get in at the low end. You know where your stop has to go. Out at the first sign of trouble. I love it. But because of the momentum, you take it down to the next fib. Absolutely beautiful. Right at the one-to-ones. What a gorgeous trade, Cindy. Termination, reversal, best momentum ever, rock star entry, no divergence. You know that this fib can be trouble, so you make sure you get paid. But with this momentum, you say this thing has the potential to break and go to the next one, and you absolutely rock start it. I love it. I love watching you guys take the same trades. All right, Joe. This is odds favorable to clear path. Up, let's see. Here we have a nice one, didn't work out. Here we have the momentum. The path is clear. All right, Joe, let's use language again. You guys are going to love this. I think this is one of my favorite things to do. So when we talk entries, guys, it's cool to know the language. Entry at an area inside of favorable large triggers, right? That's the language. That's the rule. Joel knows it. Joel, there's your area, brother. Makes this a little smaller. My potential area is outside of triggers. It's where the market shouldn't go. Does that make sense? This is why we use the language. And here, let me pull this over. So, price No, you're good. Price is likely to correct to the triggers, right? Price is likely to bounce at areas, but the areas need to be inside of triggers. And guys, this is the lesson. This is the lesson that says, hey, you know what? Once we're on the wrong side of the triggers, I don't know where it's going to stop. I don't know where it's going to stop. And that was crude oil, right? So let's go look at it, just for grins. Let's go look at crude oil and see what happens. So this is it right here. If you said my entry isn't perfect, whoops, my entry isn't perfect, let me wait for a reversal bar, then you got it. And then you get a higher divergence. And guys, this is one of those things, once I get to the wrong side, I just don't know where it's going to stop. You're all right. Joel, you are so consistent with what you're doing lately. You totally get a hall pass on having a lapse in judgment. But this is such a great lesson for everybody in the room. So you get props for teaching it. And I'm going to take this picture and I'm going to drop it into the room, guys, because I think this is one that needs to be studied. Once I get to the wrong side of the triggers, I can't know where or if it will continue down. I have no place for an initial stop, right? So I'm going to drop this one in the room, guys, because this is a good one for new users, and this is also the reason why I very annoyingly use the phrase, language is important when you're learning this software. When you're looking at strength in a move, it's important to use the phrase odds favorable momentum. And when you're looking for whether or not something's in your way, using the language, I have a clear path, it pays dividends. And then the same thing on entries, guys. I need an area inside of favorable large triggers. Holy crap, I don't have it. Maybe I should wait for confirmation. And you got it, right? From the area, not from the triggers. And then it still didn't work out, but it was a good shot. It was a good large chart read, a little opportunity behind it, Joel. Nice job. And then Pete, market down 50-50, 71.19. Just missed you. I love it when this happens. Pete, forgive me. Put an order at the mid band. Guys, fibs mid bands yellow 1-to-1s. Fibs mid bands yellow 1-to-1s. The bottom of this window was right at your exit. Right at your exit. Right at the area inside of favorable large triggers. It looks like you got slipped. I can't figure out for the life of me why everybody is so damn jazzed about mid-bands when every day I say fibs, mid-bands, yellow 1-to-1s. And none of them are more important than the other. And Pete, I'm so sorry this happened to you. But you deserved this miss. Because that was your entry. You tripped over pennies trying to save a couple dollars, guys. Fibs, mid-bands, yellow 1-to-1s. And this is why we get in at the bottom of the window. Cav, you too, man. Pete, I'm sorry that happened to you, but I think this is a powerful lesson. Then I'd hit sell. Or at least get in on the reversal bar. But I think the biggest challenge on this one, Pete, is you exited at the entry. Once again, you exited at the entry. And I hate that I remember how many times that's happened. But that's at least 6. I recognize patterns in you guys. When you start doing the same thing over and over, I see it. Odds favorable momentum, trade 1 up, 1 down entry. Oh, didn't get a chance to move. All right, that makes sense then. Momentum, momentum, momentum. You trade a pattern that's been proven absolutely perfect. Quit target. The only thing, oh, couldn't trail stop fast enough. Right on. That's pretty good for me. A fib with weak triggers. I love that. Great job, though. Great job. Termination creates momentum. There's the pattern that creates success. You get in, you've got perfect stop placement right here. As you get into trouble, you've got perfect stop placement right here. As you hit the next trouble, you get your stop. Great trade, dude. Great trade. And guys, that's all the pictures. You guys are killing it today. So what do we see on crude oil right now? Do I have odds favorable momentum? All my new guys, give me a wire and in the room. Do I have strong triggers? Do I have a look that says the market where the odds are favorable for it to continue up? What do you guys think? I'm going to tell you right now, if you're struggling with your trading, you should be answering these questions. Has nothing to do with momentum, guys. Do I have odds favorable momentum? 50-50 is all areas. Has nothing to do with momentum. And guys, it's not even 50-50. For the love of fuzzy. Okay. So momentum, guys, this is why traders have problems. I ask about momentum and you tell me about path. That's okay. The momentum is there. Price reached Fibonacci resistance. All of the triggers are below. Do I have a clear path? If you said 50-50, you need to study, guys. Hell no, I don't have a clear path. Absolutely nothing about this path is clear. Well, we're looking at my charts, Pete. We're not looking at your charts because I can't see your charts. Guys, this is how big the box is of where price may return. If you thought I'm going to pull one over, belt. If you thought, you know what, I'm going to trade into that termination condition. I've got support at 715, but I've got the bottom of the triggers at 92. I got $270 worth of risk. Who feels good about that? Anybody? I don't. Especially from a bad bottom. You guys, this is how the read goes all the time. What's my momentum? My momentum is awesome. What does my path say? My path says it's not clear. My job is to sit on my hands and do nothing as a brand new user. And then if I want to play if-then, if the small triggers smash above 25, I might look for a 50-50 trade. If resistance holds and everything reverses, I've got some work to do. See that support that created a giant bounce? Once small and large got below it, look at that. It's acting as resistance. Absolutely insane. If you don't think other people know about these numbers, you're not paying attention. Let's open up the S&P. All right, guys, so this is the part of the day where I'm like, man, I sure hope they ask questions. Pretend like it's just us in the room, guys. Pretend like it's me and you. That's it. There's nobody else. The other 42 bodies don't exist. What do you wish I would talk about? What do you wish I would pick up the phone and call you and say, hey, I really want to help you with this. Jonathan, we're going to go to NASDAQ because you asked the question earlier, so let me know that you're in here. I still, for the life of me, you posted a chart from my boredom? Oh, thanks, Belt. And you even annotated it. Who are you? Weak bottom. Odds favorable. 50-50. So, Belt, this lesson's for you, man. You're going to dig this one. You see your entry? Dude, that's a rad entry. That's support inside of favorable large triggers. I want you all, NASDAQ traders. Jonathan, this is your first lesson on the NASDAQ. I like the look. I like everything. This is great. Look at the momentum. Look at the potential to break. Look at the area inside of favorable large triggers. Belt, you felt pretty cool at this one, didn't you? You're like, hell yeah. We're more likely to go up than down. So guys, here's the difference on the NASDAQ. These small triggers will absolutely kill your trend trade. And if you look at them, they behaved as resistance right there rather than continuing up. You got effed. Good. Good. Have you guys ever heard me say, as long as you don't get a reversal bar on the wrong side of the triggers, it's still going up. As long as you don't get a reversal bar on the correct side of the triggers, the other side of the triggers, it's still going down. As long as you don't get a reversal bar on the other side of the triggers, it's still going up. Give me a Y if that makes sense to you. Because guys, this is the keys to the kingdom on the NASDAQ. This is the golden goose. So Belt, I like everything about your trade. You NASDAQ trend traders, there are two looks when you get to your area. The first look is your small triggers are less than a full bar away. Your small triggers are below the reversal bar marker for this trade. I'm going to open up the NASDAQ and we're going to go take a look at them. This is your first look. And this look right here necessitates, how's that for a word? A close on the correct side of the triggers. Hold on. Check this out, Belt. Mark just made that up. This look here necessitates a close on the correct side of the triggers. So Belt, your entry, your best of the best entry with this look was right there. And your risk is established and it never freaking blinked. Guys, this is the best way to take NASDAQ trend trades. When the rules are met, don't fight the small triggers. If they're closer than a full bar, don't fight the small triggers. If they're coming down against you, don't fight the small triggers. They're very likely to behave as resistance. Because guys, this is not a tiny little insignificant 5-1 chart. This is a 13-2. This is a big honking chart. The NASDAQ moves. When price reaches the area, Jonathan, if the triggers are less than a full bar away, if my trigger lines are straddling or below my reversal bar marker, I sit on my hands and I wait for a close on the correct side. If it comes way down here beyond the areas, I don't take it. It's too far gone. It's where the market shouldn't go. But if it comes down, gives me a close on the correct side, not a reversal bar. A close on the correct side, this becomes my entry. Does that make sense, everybody? I'm telling you, I blew out like 15 accounts learning this lesson to share with you. If price returns to my area and the large chart rules are met, if my triggers are above the reversal bar marker, if they're more than a full bar away, I'll go at the area. So Sid, anytime I say the close, let me go and let me make some bigger bars on the NASDAQ here. Anytime I say the close, I mean, so right here. In order for this bar to become a reversal bar, that was the wrong thing, the bar has to finish. The bar has to reach the distance to create the reversal bar. Get off of there. So that means that the bar closes. So a close on the correct side of the triggers means that the bar finishes printing and it finishes printing on the correct side of the triggers. Does that make sense? Awesome. So let's see if we can find an example of that. And this is a pretty wonky look. So we're going to go try and find a better example. And guys, I have to tell you, I am 100% committed to tell you that the NASDAQ trades faster and more furious than any other market I've ever traded. And I love it. And I love the NASDAQ. But check this out. Momentum, right? Does everybody see it? Let's do it like this. I've got momentum. Everything says down. Hell, it might have even been a clear path at the moment. Price pulls back, and I get to these areas right at the triggers. And look how close the small triggers are. So for me, this look, guys, says pump the brakes, wait, don't do it. It's going to keep pushing up, and it's probably going to keep pushing up until you get a close on the correct side of the triggers, until we form that reversal bar that closes on the correct side of the triggers. And with this look on the large chart, I want you to see what happens after that close. It does everything with the large chart. But that little deal right there, I'm waiting for the reversal bar, and man, I don't get it till all the way up here. So when I take a shot, I'm at least taking a shot from the right side of things. Let's see if we can find one where it's a full bar away. Well, that has so many divergences, we don't want anything to do with it. Whoops. I know there were some NASDAQ opportunities. Small triggers on the 13 too. So let's go through it real quick. And I'm going to circle a couple of these. And we'll just go look at all of them, guys. And then Josh, don't let me forget, momentum trade is next. So each of these circles represent an opportunity. So this first opportunity, let me line them up, is an opportunity long. But it's really not. 3 divergences, split triggers, no dice. This one, however, is a 50-50 from a strong bottom. So check it out. Price is coming down, it's coming down, coming down, coming down, and we hit the area. Does everybody agree that this is probably where we're looking for the trade, the area inside of triggers? Midband probably wasn't in there. Does that make sense, everybody? And we're looking at this trade right here, 50-50, everything's up, here it comes. I get to the area, guys, and the small triggers are less than a full bar away. They're below the reversal bar marker. And I want you to see, I said, oh man, I gotta go. And it pushes up, and it hits those triggers, and it comes right back down. And guys, this is such a common look. And I want you to see. Enter here, right? You're probably still in the trade on this particular one. This is the look that says now I'm on the correct side of everything, and my risk is already established, and it runs off. And guys, it's that little bit of patience that really helps out with the NASDAQ. And this is a NASDAQ thing. This isn't a crude oil thing. As we're coming up to the areas, the small triggers are less than a full bar away. I wait for the close on the correct side, and it becomes an easy trade. All right, coming back to 1014. I have a 50-50 trade. Divergence prints, but if I'm still going to take it, it just, look at this. There's my close on the correct side, and it goes up on a 50-50, maybe not a lot of room. Divergence prints, and I never get really confirmation. So, guys, that's it on NASDAQ. Look, there's the small triggers behaving as resistance again from areas on the wrong side of triggers without momentum. Guys, NASDAQ is no different than any other market. The only difference, the rules are the same. The large chart rules are the same. The small chart entry areas inside of triggers is the same. The only discrepancy is you're going to watch those small triggers. And it's gonna keep you out of a lot of losers. And it may mean that you miss a winner or two. Smalls were a full bar away. If you're taking the trade, you're in at the area. Smalls are a full bar away. If you're taking the trade, maybe you're in at the area. And guys, it takes practice. It's fast. It is fast. So let's talk momentum trades, Josh. The first rule for a momentum trade. The first rule of Fight Club, guys. You know what? It's 11 a.m. I'm going to go take 5 minutes. And when I come back, Josh, we're going to talk momentum trades, okay? But here's what I want you guys to do when I disappear for a few minutes. I want you to remember that there's rules, right? There's a good way and a bad way. There's an easy way and a hard way. Here's the rules. Here's the rules, and I want you to see the first rule. Good top or bottom. Reversals or breakouts of Fibonacci are preferable. The T3 trigger lines cannot get beyond the Fibonacci tops or bottoms. This is the one that I want you guys that are looking for momentum trades to commit to memory. When you can define a strong termination condition on all of your charts, this is the most preferable look. Strong termination, no triggers through. It doesn't have to be a top or bottom yet. It doesn't have to be a strong top or bottom yet, but no triggers through the termination that it's coming from. That's the one thing I'm going to leave you with, and then I'll be right back. Look at that. Odds favorable. Man, the path is clear. Wait a minute. That's an area inside of triggers, and that's where the market shouldn't go. I wonder how this one's going to work out. Now I got to finish it, right? Does everyone see it? Odds favorable. My path is clear. My entry's at the area inside of triggers. And my stop is 4 to 5 ticks beyond those trigger lines where the market shouldn't go. Guys, this is a trade. It's not coming from a strong bottom. But that fits the rules. Does that fit anyone else's rules? What are the options? So I either get stopped out. Guys, that's 5 ticks. That doesn't suck. I either get stopped out or I get a reversal bar. Those are my only 2 options. This look is worth $50 to me. We're gonna do this one out. We're gonna kiss plan it start to finish. The entry fits the rules. Why, Jonathan? Why would you wait for a reversal? You have odds favorable momentum and a clear path. Why? Why would you wait for a reversal? You have an area right inside of triggers. Why would you wait for a reversal? There is no safety. Your reversal gives you $120 worth of risk. The correct entry gave you $50 worth of risk. Does that feel safer? Hell no. On a 2 lot, that's $140 worth of risk. What is safer? Great entries create manageable trades, ladies and gentlemen. Great entries create manageable trades. What I did. Men at the area, at the bottom of the range. The only line inside of favorable large triggers. My stop is where the market shouldn't go. Guys, I'm risking $50. $50 and I have momentum. $50 and I have a clear path. $50 and I had a place for a bounce. There's my reversal bar. Now I'm risking, hold on. Now I'm risking $40. And Jonathan, you would have just gotten in. And I'm a tick away from my first target. Get up there. It hit it, but it didn't fill. It's on it right now. Will you fill the target, please? It's been hit twice and it didn't fill. But guys, how cool is that? Like a sniper. Hate it when they hit my target and it doesn't fill. But my plan says when my first target is filled, I go to break even. And once I go to break even, I don't do anything until it either hits my second target, there we go, or it gets me break even. I know, Jonathan, great lesson. Whew. There's nothing left for me to do, guys. Either my target gets hit or I get stopped out break even. So I'm going to mute. I'll be back in 5 minutes. I'll come back and see how it worked out. Go stretch your legs. Or actually, manage your trade if you're in a trade. I'm not going to bother managing it because my plan says I have nothing to do here. break even, it looks like. Man. They got me break even. So you guys ready for a lesson? You made 20 bucks. How the hell did you make 20 bucks? So check it out, guys. When my rules are met, and this is the key. I know you did, Pete. So the rules are met 100%, right? 100%. If this trade didn't exist, hold on. Let's do this. If the first trade didn't exist, with this look, would that still be an entry? What do you guys... Remember when I said that you would be empowered to craft a plan tailored to your personal goals based on your ability of reading the indicators? This is still an entry, and your stop still goes down here. Because that's 4 to 5 ticks beyond. But what happens on this particular trade, guys, is the rules never stop being true on the large chart. And sometimes you'll get a second lower divergence. And this is one of those things that may become a management thing for you guys. Second higher lower divergence can still look for re-entry with confirmation bar. So Steve, in my own personal plan, as soon as second divergence printed, I would have exited the trade. That's an exit condition for me in a trend trade. In the KISS plan, I would have held for break even. In my own personal trading plan, because I have experience reading the indicators, I would have taken an exit when divergence was true. But my plan also says when the large chart looks like that, you better get your ass back in with a confirmation bar in the direction of your trade. And then I would have held that one all the way up to fibs. Does that make sense, everybody? This is an awesome, but look at the large chart. It never blinked, did it? You still had momentum and clear path the whole time, guys. And this is why I'm telling you, sometimes you'll take an exit. Sometimes you'll re-enter. If everything changed, I wouldn't re-enter. But guys, this was the KISS plan. And this is what I want you to realize. This was the KISS plan management for that trade. Why? Because it gave you the perfect entry. Because it gave you the perfect stop placement. Because it allowed you to get paid quickly and you didn't lose any money. Is there anyone in this room that would step over a $100 bill if it were laying on the street? No, of course not. Guys, this is why we follow the KISS plan until we have the ability to read our indicators and recognize patterns so that we can hold for the whole move. And you NASDAQers, remember what I said, as long as it doesn't close on the other side of these triggers, it's not going down. Should we see how long this lasts? This is a great lesson. There's a close on the wrong side and it pulled down. There's a close on the other side and it's been going up ever since, right? How far is it going to go? I don't know. But if I'm holding for the home run, that's a pretty good way to do it. Why the hell? Oh, I know why you went short. That was the... Man, Pete, we haven't seen that one in a while. Perfect entry. You knew what was going on. Never got your stop. Perfect exit. Absolutely beautiful, Pete. Way to take something we just did live and prove that once you recognize patterns, you're going to be able to catch it. So guys, if I were in this trade, let's just say hypothetically I'm in this trade, and I just put my stop on the reversal bar marker because I know that as long as I never get a reversal bar on the other side of these triggers, it's going to keep going up. This is one way that I'll chase moves for as long as the move lets me chase it. Does that make sense? This is great for you guys that want to hold for bigger moves. A reversal bar is a great indication that there may be a deeper retracement. There's no reason to give that money back. And guys, this isn't a real trade. This is not a real trade. I have weak triggers, but maybe it'll give us a little something something where that reversal bar doesn't happen and it keeps going up and we just chase it for grins, right? Guys, this is not a real trade. I don't have any momentum. I'm not taking a momentum trade here. You guys like this lesson though? Hopefully it plays out and you see it a little bit. I haven't had a close on the wrong side of the triggers yet. So if I were thinking, man, I'm gonna hold this and just see if they run, what great stop placement. What a great place to say, I'm gonna force them to take me out. And this one probably will because I don't have any momentum in the move. Maybe it won't. I'd love to get an up bar here. So Josh, are you with me? If I had momentum on all of my charts, small triggers break the area, that would be a momentum trade. But I don't have momentum here, so how could I take a momentum trade without momentum? This is exactly what it looks like though. Small triggers break, pulls right back to the area, and it's literally, if I get two down bars, I'm out. It's virtually no risk. That's exactly what they look like. When you're coming from a fib, when all the momentum is up, there we go. There's my reversal bar and I got out. And now I have no idea how far this thing's going to go down. But that's kind of how you can use the reversal bar. So let's go see if we can find one, Josh. We'll go from right here. This will be our no triggers through termination. And I don't know if it happened or not. We're going to find out. Whoops. Um, 10:02. All right, so there's my termination. Pretty cool, right? You can see it here. You can see it here. So for these momentum trades, the same concept that says as long as it doesn't close on the wrong side of the triggers, as long as these triggers roll and they're going up, Josh, the left side of the triggers is what we call the momentum phase. This is really the only time when I worry about what side of the triggers the bars are on. Because look at this. As it goes down, it continues to go down until we close on the wrong side. Isn't that nuts? So we're on the momentum side, and we're coming from a term. And we're on the momentum side here as well, and we're coming from a term. Small triggers break. That's your momentum trade right there. That little snapback. You're looking for the mid band. But that little snapback, that's a momentum trade, 100%. And what a momentum trade off the bottom is it's saying, hey, look, check it out. We hit it, we rolled, everything is screaming. Let's look for the first opportunity. Does that make sense, Josh? And then, here up top, this is where we might say, man, this has the potential to break. Because we had a strong bottom, because everything was going up, because, man, this thing is screaming. And then, Josh, here's your loser. Whoops. Sorry. When the small triggers break, this right here is your shot at the momentum trade. You're in at the fib. Reversal, 1, 2. That's your stop. It's about a 3-tick stop. 2 bars down. That's it. 2 bars down, momentum's over. It's done. That area's not going to hold. And look what happens. So Josh, you got to practice that. But a strong is the best of the best. The strong top or bottom is what sets it up. Strong top or bottom is what sets it up. Let's see if we can find one on the S&P. 946. We'll do trying to add more trades to your belt. Why? Man, this comes with all the respect, Josh. You're still struggling to manage the best trades. Why are you adding more trades? You're still scared to take the right entry on the highest probability trade ever. Why on earth are you going to give yourself something else to focus on? Just throwing it out there. You do whatever you want to do. I don't tell you guys what to do. I was looking to see, a lot of times you'll get those 1-to-1s, and that's a great look. But you also have to have a clear path. That was a good look to get up to the fib. That's NASDAQ. Terminationville. Population U. Termination. Let's see if the NASDAQ gave us a momentum trade off the top. There it is, Josh. Termination. Everything rolls. There's your snapback right to the area. Down it goes. Off the fib, it bounces. If you thought you were going to take the short, the close on the correct side puts you in with all the momentum going down. You guys see that? There's 2 lessons in a row. There's your momentum trade. It doesn't last very long. Not fighting the small triggers pays dividends. Is that making sense, guys? And for you newer folks, guys, this is advanced. This is what happens after you get good at taking the right trades. This is what happens after you get comfortable with your entries, where you begin to recognize patterns a little bit when you're managing your trades the way you should. Jonathan, I'd love to see how you entered and exited that long back here. Did anyone else take this trade other than me and Pete? That was the one, right? How did you manage it? I'm going to tell you right now, if you blew the management, you should probably post in the room. You took it, Wayne? Joel, you got break even. Did you not get first profits? Okay, awesome. You lost 40, Wayne? Did anything I say help with that a little bit? Just no reason to lose 40 on that one. I don't think. Your first target was 180. There you go. Just a little off to your goals. It makes sense. That makes sense then. Does everyone understand why you could take this bar because of this look? That's the one. That's the one. Guys, you're going to have to take trades twice a lot. It's just a part of it. The market's a giant fight all the time. Just because we get the perfect entry and quick profits doesn't mean that the fight is over. And then once they're like, sellers are like, oh, we really wanted to go. And the buyers are like, dude, told you, no way. So let's try it again. I'm just going to follow the reversal bar marker. We're going to see if we can get this to work for us, right? Until I get a close on the wrong side of the triggers, we're going to let this one run all day. Or until we hit the fib. Does that make sense, everybody? And look how it keeps going up. Look how my risk keeps diminishing as we go up. So if you're in that runner mentality, every time it moves up, I'm on the reversal bar. Let's see if it makes it to the fib. Whoa, that's so fast. Now I have no risk. Guys, I'm telling you, this is a lesson that will put money in your pocket long term. Until I get a close on the wrong side, it's not going down. It can't. What do you guys want to talk about? We've got time. I bet Pete's long from 53. Oh, close on the wrong side, I'm out. Look at that. With momentum and a clear path. That's too vague, Jonathan. What do you want to know about them? They're just triggers. They're moving averages. That's all they are. They're just moving averages. No different than any other chart. When they say down, it's down. When they say up, it's up. When there's separation, there's strength. When there's not, there isn't. That's it. It's no different than a 13-2 chart. Don't fight the small triggers on the large chart. Don't fight them on the 21. I don't know what silver white band you're referring to. Can you show me a picture? But I'm telling you, the triggers define momentum. I'm looking at it right now. I've got light blue and I've got green. I've got odds favorable momentum up. Ah, there you go. Thank you, John Novak. And Jonathan, you wanted a video to watch too. Man, John Novak for the win today. Somebody should be this guy's brother. Perfect. Do you see how it's odds favorable momentum? Beautiful. Setting limit orders. I got you, Sid. And Jonathan, there's your best lesson. What's the market doing when these are screaming up? It's going up. And as long as I'm on the correct side of those small triggers, it's going to continue up. Let's just keep doing this lesson. As long as I'm on the right side of these small triggers, it's going to keep going up. Jonathan, can you take a picture of the silver white band for me? That'll help me. So Sid, setting limit orders. And guys, this is not a trade. This is me just jumping into the market to see if that reversal bar thing keeps working. Oh, the upper lower band. John thinks it was this one right here. There we go. Close on the wrong side. Is it this right here, Jonathan? Hold on. Let me make sure that I've got it. That one right there. Silver white band. Okay, same thing. These are the outer bands. The easiest way to think of these, Jonathan, is exhaustion points. It's just the outside range. So when you get to an exhaustion point, especially when it lines up with fibs, works out pretty good. Good question. And then John's going to give you some good stuff. All right, Sid. For those of you that are one up, one down traders, that was it. I'm going to go to a slower market, Sid. All right. So let's say hypothetically, we want to enter a long trade at the mid band. As long as I'm below price, I can right click and buy limit. And what this does for me, Sid, is it says if price reaches this order, and I'll put it at the mid band. We'll pretend like it's inside of favorable large triggers. If price comes down and reaches this order, I'm going to be in a long position. I'm going to be in a long position with momentum and a clear path from my area inside of favorable large triggers. So as long as I'm below price, it's going to default me to the limit order, and then I'll put the limit order right where my rules are met for entry. Does that make sense? Not a real trade, Pete. We're only talking about orders. If I'm above price and I right click, it's going to prompt me to sell. which means if price comes up and hits this, I want to be in a short position. And that's really all it is. And we'll use these limit orders and we'll put them right at areas inside of favorable large triggers. So if it gets to our area and it hits that entry, then we're going to be in that position. And what it does is it allows us to really call our shots where we want that market to continue from, where we're willing to put our entry. And by doing so, it lets us know exactly where we're going to put our risk. So odds favorable, clear path, and we didn't have an area inside of favorable large triggers. If you used a reversal bar, your risk is established. It doesn't guarantee a winner at all. But what it does is it says the large chart looks great, but the small chart is not perfect. I'm going to insist that the market give me a reversal bar so that I can manage my risk because I don't have triggers to put it behind. And then you go right into KISS plan. If I reach $100, it's just the same. I'll go to break even. It just had further to go to get there. So I'm in, $100, I'm break even, and sure enough, they just got me break even. You're welcome. Guys, trading is about this ebb and flow, right? It's like watching the market and you're seeing things and you're wondering things and you're like, oh man, everything says up, this looks great. And then you have to say, rule number 3 is not met, my entry's not perfect. Maybe I should insist on confirmation. And I think Pete threw that in the room. Pete said, man, reversal bar all day long, but if they don't confirm it, I don't have any idea where that market may stop. Once I'm on the wrong side of these triggers, I have no idea. And guys, there is a cost of confirmation. There is a cost for confirmation. And Pete may say the same thing. It's only 2 divergences. The only way I'm going to go long is with the reversal bar. So if I right click and hit buy stop market, it forces the market to make a reversal bar right on that reversal bar marker for me to enter. But what I have to look at is now I've had 2 divergences. Now my large triggers are rolling. My small are below the large. I'm on the wrong side of the triggers. Is that still your trade? And that's something that you're going to have to answer. It doesn't fit my rules. It still might go up. It just doesn't fit my rules. What's the hardest thing to do? Nothing. The hardest thing you'll ever do is absolutely nothing. The hardest thing that you will ever have to accomplish is accomplishing nothing when the rules aren't met. I promise you that. The looks are not difficult. Guys, the patterns aren't difficult to recognize. The plan has been given to you in such a way that you have everything that you need. You know how to learn the looks. You have a cheat sheet on how to recognize them. You have a plan to take the trades. You understand that you don't have to make $1 million a day to be a millionaire. And you know that you have to understand why to enter and why to exit, guys. Nexgen gives you everything that you need. I give you everything that you need. John Novak has created everything that you need to be successful with the software. The only thing that you have to do now, the only thing that you have, is to minimize your learning curve by posting pictures of your trades in class, guys. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? To be sure, you need feedback. We're here to help. John Novak, the CEO, the guy that wrote the software, just came in and answered questions. How cool is that? If you place a trade on simulator, if you participate in class, guys, there's no risk or loss of capital. You need someone to tell you what you did right or wrong when you're new. That's what we do. 15 hours every week, live feedback. And you know what? The waiting is the hardest part. Tom Petty knew this. And it was even harder for him because of his cocaine habit. But he knew that it was the hardest part. Can it be done? Hell yeah. And he's dead. His heart exploded. Cocaine's bad, kids. My opinion. That is not based in anything, but it'll kill you dead. Josh, did that help? Did I miss one of your charts, Wayne? I'm sorry. Never intentional. Never intentional. Sometimes I just get wound up. Can you give me a hint on when you posted it? There it is. 11 a.m. solid. Oh, no wonder. I was out doing things. My bad. In 76 on oil? Oh, Pete, don't call your shots, Pete. Someone may jump in. You might be drunk this morning. Just post the chart with Y. Please, post your chart with Y. You're good. All right, odds favorable momentum. Room between fib, one up, one down. There's that pattern again. You take it perfect. You even have an HVA line to support it. First target. And then you get down and up again. And then you move your stop. And then you're out. I love it. Great trading. Right back to the fib. Right inside of triggers. It corresponds with up down. The large chart says go. You get paid. Use the same pattern for management, which I love. Wayne, the only thing that, my only 2 cents on what you do, my only 2 cents on what you do is I think you give a lot of money back directly into problem areas with weak triggers. And it's cool. And let me do this, right? Let me give you my 2 cents on it. And again, guys, I'm not going to give you trading advice. That's not what I do. So if these 1-to-1s are where the market could stop, right? And I get to them and I know that it could bounce. And Wayne, you're in a trade, right? And you're feeling great. The momentum is down. You reach the area. Everything's good. And right there at 96, you know that there's a potential problem. And let me put the circle on it just so it makes more sense. So right here when we reach trouble on the large chart, Wayne, if you got that lesson, once price gets to the wrong side of these triggers, that's the beginning of the retracement that we use for trend trades, right? So you say to yourself, right here, this is trouble, but I want to hold. I want to make more money. One option people use is they force the reversal bar. And Wayne, you never get it, and down it goes, right? And once you get the reversal bar, you're out. There's profits. Let's wait for the next trade. And that same idea, you get to the area, the triggers are weak, they're stacked, right? Force the reversal bar. The difference between, I don't know, what is that, 97 and 91 is $120. And I just want to throw this in, and again, I'm not giving trading advice, but I want you guys to think about this. If I give $120 away on every trade, 4 times a day, 5 days a week, 52 weeks a year, right? I suck at math. Hold on. We'll just do this. 120 times 252 trading days. We're giving away a lot of money. And granted, you're making a lot of money because you're taking beautiful trades. But one of the great things about Nexgen, guys, and I think one of the things that sets us apart is you know exactly where the market is likely to go. And not only do you know exactly where it's likely to go, you have this understanding that when I have weak triggers, the areas are more likely to hold. Does that make sense, everybody? It's okay to get paid at that red line because you're freaking good at this. You're gonna find the next trade. And I really do believe if you have an arbitrary number, right? And let me get to this one. If you say, this is my stop, this is my target number right here, this is it, 100%, and you ignore everything that happens on the way to it, it doesn't make sense. I have to get to 97 to reach my tick number. Well, you got 2 divergences, weak triggers, wrong side. You've got to pay attention a little bit. Management can't be about just arbitrary numbers. The same way that putting your stop, when people tell me, oh, my stop's at 12 ticks. No, your stop goes where the market shouldn't go, guys. Is that the repost, Jonathan? Jumping in with absolutely nowhere to go and losing money. And then jumping in, understanding where trouble is, and getting paid at the area. Big difference, right, Jonathan? No room to the target, room back to the target, and you know where to put your stop. Huge difference between the two. It's all right to get paid at lines, guys. In your app, I'm sorry, Jonathan, your link to the previous trade is broken. If you wouldn't mind reposting it. Oh my gosh, Josh, steal this picture. Steal this picture. Josh, check it out. Momentum phase, everything's up, screaming. Everything's up, screaming. Everything's up, screaming. The first trade you were listening to me, you could have managed it, but you chose to listen to me instead of manage your money. I just had to say it out loud so you could hear it. Josh, do you see how it broke and he gets in right on the snapback? That's it, Josh. That's your picture. Man, Steve, great job on that one. That's your picture. And look at that. It doesn't stop. Well, hell, it stops right at a red line. And then, Steve, do you remember the idea that as long as it doesn't close on the wrong side of those triggers, it's not coming down yet? I love that lesson for momentum trades because sometimes they run, man. I like your exit. Mid-band makes sense from a bad bottom. Just looking for snacks. Great job, dude. 18-second trade. What am I explaining? The idea of closing, Wayne? I'd love to. It's one of my favorite lessons ever. Yeah. And this is true on all charts. So let me go back to where we don't have things to look at, okay? And this is a market with a couple different. So I'm going to take a big picture real quick. Guys, this is just, so let's do this. Hypothetically, I'm in a short trade. Hypothetically, I'm in a short trade. Small triggers are down strong. And then, Wayne, I'm saying to myself, my target is here. This is my arbitrary number. This is my, I have to make 36 ticks. Right? And you're just unwilling. There hasn't been a stop movement. You're unwilling to yield. As soon as price closes on the wrong side of the small triggers, you run the risk of bigger retracements. As long as price does not close above, this market's going to continue down. So if you took this trade and you get here to the fib and you're like, man, I really want to hold this trade, the market doesn't start back up until it closes on the wrong side of the triggers. And then if you're in this trade and you're like, oh man, should I hold, should I hold, should I hold? Oh, it's going to make the next area. There's your close on the wrong side of the triggers. As long as you don't close on the other side of the triggers, guys, it's going to continue in the direction. As long as I don't close on the wrong side of these triggers, it's going to continue in the direction. I don't care what market you're trading. And this is one of the cool ones where if you use that reversal bar marker as a stop, you don't get stopped out here. You don't panic stop. You take this one all the way up to there, and then you get out. Thank goodness, right? So I love that lesson. That's kind of a next level management. Everything says up, the path is clear. You're in right at the bottom of the triggers. It pulls all the way up and you make 20 bucks. And then Jonathan, on that same thing that I just told Wayne, if I'm just going to arbitrarily jump in hoping that momentum's going to carry me, The close on the wrong side is so much better than letting it blow all the way through, isn't it? When the momentum trade failed, it turned into a trend trade. Guys, if you're jumping in when your momentum trade fails, very often it turns into a trend trade. And this is a great example. It's okay to get paid. There's two types of people. There's people that are totally resistant to making $100. And it's almost like they just look at the market. They're like, you know what? F you and your $100. I'm better than that. And then there's you guys that make $100 on every trade you take. You make at least $100. And then sometimes you make another 2 or 3 behind it. But with that $100 in the bank, guys, even if I have $80 of risk, it becomes a pretty easy trade. Jonathan, there's a time to jump in. But just because you jump in doesn't mean you get a winner, right? When's the time to jump in? When there's momentum and a clear path on every chart you own. Jump in. But if you get a close on the wrong side of the triggers, manage it. That's the problem, is nobody wants to manage their trades. Everybody wants to get in with the hopes of making $1 million. Nobody wants to get out when shit goes sideways. That's the challenge, guys. Forgive me for saying shit. Shouldn't say shit in this room. Shit like that's not cool. 3 divergences in the same price range. No, there's a difference. Jonathan, you love jumping out. You love exiting too soon. You love exiting too late. There's zero management in what you do. Managing a trade means that you recognize conditions and you react to them based on a plan. That's management, guys. Management says, if I'm in this position, 3 divergences is change. I have to exit because this may terminate the trend. That's management. And at the risk of sounding like a broken record, yeah, I do that every now and then. Why will I enter? Why will I exit? And look at this one, guys. If I'm in a momentum trade, what'll it take to get me out? Might be this one. No, the sad thing is, Jonathan, I'm not good at a lot of stuff in life, but I'm really good at reading indicators, and I'm really good at recognizing patterns in people. And my favorite thing in the world to do is to help you guys work through challenges. So you're going to make the same mistakes over. We all do. I do. Everybody makes mistakes, guys. Jonathan, you have the courage to post in the room and have a conversation about it, which is why I'm not worried about you. Being good at this is not easy, guys. If it was, everybody'd be rich. Trump would have had nobody to work with at McDonald's the other day. But the thing is you can get to where you want to be by participating. You can get to where you want to be by asking questions. You can get to where you want to be if all you do is take pictures, take trades, get better. Take pictures, take trades, get better. That wasn't political, Andy. That was a McDonald's reference. That was a McDonald's, I know. But yeah, we try to avoid politics in here, guys. Is that it? I feel like we learned some stuff today. Sid, how are you doing? You're at that point where you're about to make a decision. I want you to be real vocal if you need any help making that decision. Who else is relatively new in here? I'm looking. There's a couple names that I recognize, but they're not saying anything. Oh, absolutely. Everybody loves McDonald's. Feeling better? Good. It takes a few days, Sid, and then it starts to make sense. And that's where practice really, really pays dividends. Because we get into this, and it's like drinking from a fire hose. And there's a reason that I show that picture a lot. It can be overwhelming. Red Eye, how are you doing, man? You've been in 4 months now. You can't wait for the next trading day. This is awesome. I love that. I was missing you, Belt. You guys think I don't notice when you're gone. I do notice when you're gone. And I notice when you come back. When I saw Paul's smiling face in here, it made me happy. I can't wait to get to unleash Z Robot. Did I? Man, I sleep a lot. Big Dog keeps showing up. He's going to show me some trades. Absolutely. And Red Eye, you're going to keep doing it, man. I promise. And this is the thing. One of the things that I like to tell people is I'm going to teach you how to study. Guys, I want you to work your ass off to prove me wrong. And I really do. And I know that sounds crazy. Red Eye Sid, I want you to work so hard to prove me wrong, to prove that I'm full of crap, to prove that I'm a snake salesman. I do, because you'll be with me forever. Some of like my most fiercely loyal customers. It may not have been Belt. There are scammers out there. Let me see if I sent you a message. I don't see you in my messages at all. So it was probably a scam. Guys, don't ever send money to anybody. I love it, Sid. I'm looking forward to working with you guys too. And there's people in here. Guys, raise your hand if you were like me. For the new guys. Who started off and thought, holy shit, I'm never going to be able to do this. And now you're like, wait a minute, I can do this. I am doing this. I know I was like that. I almost quit. I blew out $5,000 in like 4 hours. I almost quit. My brother wrote the software. I know it works, and I almost quit. Because I refused to learn how to work it. So, I don't know. I'm excited. There's just no doubt. The all-seeing, like the Great Oz. No, I just know the tricks you guys try to pull. Hey, Mark, here's my $300 winner. Right? Yeah, no, that was... And then you're minus 900 on your P&L, and I know that you're hiding losers, and I know that you need help, and I just want you to ask for help. The MMs work against you. What are the MMs, Red Eye? The market makers, they don't. Oh yeah, that's totally a scam. Guys, if you ever see that, that's a scam. And Nexgen Mark is actually Mark Dean. So check it out, Red Eye. I know that you saw this earlier, but I'm going to show it again. You know who the market makers are, right? They're your large crowd. And your large crowd tell you when the market's going up, and they tell you when there's momentum, and they tell you when there's nothing in the way. It's not that they work against you. They don't care about you. They don't even know you exist. When you trade with them, life is pretty easy. When you trade against them, life becomes problematic. Watch this. When you trade with them, life is pretty easy. When you trade against them, it becomes problematic. And I can't stress that enough. You know who's in control. It's not you. Just go with them. Yeah. Yeah, they don't really. My brother always jokes, Red Eye. They're like, they have cameras on you. There's a camera somewhere in your office that waits for you to go long, and then they just stop you out short. But what I found more often than not is that if you're following the rules, you tend to be on the right side of the market makers. You tend to be on the right side of that large crowd. And once you fight them, and then the adrenaline's over and you go back and look at that picture, you realize that you were fighting. You were fighting momentum, or you were trading into areas, or you refused to have areas inside of favorable large triggers, or you didn't let the small crowd tell you that things may change a little bit. And guys, look at that. 1, 2, 3, 4 divergences, and we're on the wrong side of everything. So, kind of cool. Great day today. I appreciate you guys being here.